Hello, good evening, everyone, and welcome to the webinar tonight. My name is Richard, and I'll be your host today. Now, before we begin, just like to remind everyone who are here for the very first time to please join the OTCS Telegram channel by searching for Online Traders Club in Telegram so that you can be kept posted of upcoming webinars and other insights. If you also like to receive it as an email, please go to our website onlinetradersclub.org and click on the mailing list to join our mailing list. And if you are watching us on YouTube, please remember to like, subscribe, and share. And in case you're wondering whether this webinar is recorded, yes, it is. It is streamed live to YouTube, and it will be available there for you to revisit anytime immediately after the webinar. This is a slide to remind you to like, subscribe, and share. Thank you. Okay, before we begin, our speaker for tonight is actually rushing back from a meeting, and he has so therefore I will try to cover up some time by sharing with you some of the market updates and insights that I happen to be looking at. All right. So one of the things that I'd like to ask the attendees is, how is the Singapore market at the current moment? I think for the recent few weeks or even a few months, the Singapore market has been doing pretty well, right? So for those who are monitoring, you will notice that the S-REIT Leaders Index, this is one of my favorite asset class, which is the REITs, and in particular, it is the REITs Leaders Index. Okay, so this is the top 20 to 25 REITs in Singapore according to SGX index methodology, and you can see that it has been suffering for quite a long time, right? If you look back, this is a weekly chart. So if we look back to 2022 at the left edge of the screen, it has been on a downtrend. So for long-term investors, I think you want to buy at a bargain, right? So bargain means want to buy cheaper. So cheaper means that when it drop, we try to buy low, correct or not? We want to buy low, sell high, right? So as it has been dropping because of the tough period of the high interest rate, so you can consider to do some bottom fishing. So what happened in the last three months or so? You can see on the firstly, excuse me, the bottom, it seems like it has bottomed out. If you follow my cursor, it has bottomed out and it's no longer dropping. It's not forming a lower low. In a trend analysis, normally we'll know that a chart pattern of a lower high and a lower low is a downtrend, correct? And then we can see that back in April, the low, it didn't really form another lower low. And right now, it is turning up. So for those who wants to get in earlier, I think you can start to build your shopping list, right? Start doing your homework, all right? Because in the past few months, it has been it seems to S-REIT seems to be bottoming out, and it seems to be turning up. And now that the first rate cut is behind us, I'm pretty sure that the REITs will be going up from here. All right, so you can take a look at, do your homework regarding Singapore REITs. Let's move on. How about STI, Singapore Straits Times Index, right? And this is also a weekly chart. On the left hand side is 2020, the COVID crash. You can see it dropped. It fell quite badly, and then it recovered, and then it has been drifting sideways for quite a while, right? And then if you look at the right edge of the screen, you will see that in the last couple of months, it has also been recovering. In fact, doing very, very well, exceeding the pre-COVID high already, right? So for those who know the Singapore market, who are the top components within the Singapore market? Do you know who are the top 3 components of the Singapore market? Okay, they are the financial companies. Let's take a look at them, shall we? Firstly, DBS is the heavyweight. And you can see from the chart that this is a weekly chart also, and since the beginning of the year, it has been creeping up, right? Why? because its earnings are doing well. So obviously, that is one very important factor. Another factor is that the rate cut has happened already. The people's expectation of rate cut is happening. So that's why it will benefit the banks to a certain extent. Of course, hopefully a recession, it doesn't trigger a recession. Yeah, but if it doesn't trigger a recession with a lower interest rate, people will start to spend more. They may take up more loans, right? Because now the interest rate has lower, so businesses can take up more loans. People who want to buy properties can take up more loans, so it will also help their margins. So therefore, the banks, for those early birds, they already start to position themselves earlier in the year, right? So this is DBS, and I've here at the bottom you will see two indicators. They are the MACD. MACD is one of my favorite technical indicator, and whenever it cross, is a potential turning point, right? It will not be able to tell you for sure. There's no such thing, right? There's no such thing as 100%. But if you follow the crossovers, you will see that it pretty well be able to try to catch the swing low after the swing low, right? So you can see that in the last couple of weeks, the crossover has already happened. So yeah, so for those who are into the banks for dividends, which is paying out like even at current prices is giving out about 5%, can do your homework regarding DBS, for example, right? And you can learn more about MACD to see how you can use it to guide you in your analysis of the trends. The second heavyweight in the STI is OCBC. And you can see the chart looks almost the same, right? If let's say I flip DBS and then OCBC, almost the same. Why? Because it's also a bank. Right? So same story, right? They are doing well in their earnings, and then they are likely to benefit from the reduction in the interest rate. And this first interest rate cut is only the first in the series. I believe that there'll be more on the way, according to Joel Powell, right? There'll be more rate cut along the way. So how about the third heavyweight in STI? Right? No prize for guessing. It is UOB. And UOB's price chart looks almost the same as the other two banks, isn't it? Yeah? So same story. If I flip DBS, OCBC, UOB, they are almost the same, right? So you can take your pick. If you want to invest into Singapore banks for dividends, all three of them are prime candidates, right? They are the national banks of Singapore. And if you can only choose one, then you decide. You want to choose the one with government, Singapore government as a shareholder, then it will be DBS, right? Then otherwise, if you want to diversify, you can also consider to invest into all three. So I think it's a very good time to do your homework if you have not already done so. Okay, so that is the STI. These three banks constitute almost 50% of STI. Okay, so the STI is almost like a half of STI is the banks already. And another maybe 10-20% is Singapore REITs. Okay, so there's a STI for you, and that's the Singapore market for you. So it's a good time to still not too late to get on board if you want to buy low to invest for dividends. Singapore REITs and Singapore banks. Next, how is the Malaysia market doing? Right. So since today's talk is on Malaysia properties, let's have a look. So first, KLCI is their index. And we can see this is the monthly chart. Okay, we want to look at super long term. And you can see that it has been on a downtrend with a higher low and lower low and lower high for quite some time now. But in the most recent period, an early part of this year, if you follow my cursor, it is going at a higher low compared to the previous low, right? It's a higher low. So this suggests that the downtrend may have stopped. Okay, it's not guaranteed, but may have stopped. And if you look at MACD, the bottom one, you can see that also early in the year, the crossover has happened, as indicated by the green up arrow here. Okay, so this tells us to say, hey, let's be alert. A potential turn could be happening, right? So since then, it has been the MACD has been continuing to go up. There isn't even a blip, so we can see that the price chart, the momentum and the direction of KLCI is also going up. So prices usually go up for a good reason, right? The good reason could be that the economy is improving. So maybe later our speaker for tonight will be able to shed some light on perhaps what is going on in the Malaysia economy. So other than the stock index, another very interesting chart for Singaporeans would be SGD to Ringgit currency price chart, right? So for quite a while, this is also a monthly chart going back to 2008. That's why for those who love to go over to across the causeway to do shopping, to go to spa, to cut your hair, go to dentist, pump petrol, wow, in the past many years, we have been benefiting from that favorable exchange rate, right, for many years. Then in 2020, especially in 2022 onwards, right, the Singapore dollar has strengthened, or the ringgit has weakened against the Sing dollar and reached a peak of 3.5 not too long ago, earlier in the year, 3.5, right? Then suddenly, you see on the right edge of the screen, it has been dropping like a rock in the past, since then, since touching 3.5, right? What is this telling us? It's telling us that the Sing dollar, or rather the ringgit, has strengthened against the Sing dollar, or the Sing dollar has weakened against Malaysian ringgit. So, and the currency of a country usually strengthen against other currencies because there is a fundamental reason behind. And the fundamental reason could be that the economy could be turning around, could be doing better already. Foreign investors are having higher demand for ringgit. People are moving over there, and that's why it has strengthened. Okay, it's not just strengthening against the Sing dollar, it has also strengthened against the US dollar. So again, I'm no expert in Malaysia about Malaysia. Perhaps later on, our speaker for tonight will be able to shed some light on this as well. So that's for the Malaysia market. Next, we look at the biggest market in the world, which is the US market, right? How is the US market doing? Now, for US market, we usually will look at SPX, right? The S&P 500, 500 of the largest company in US. And they are not doing business just in US, they are also doing business globally. So let's take a look at SPX. Now, I've shared on the 12th of September, our previous webinar, I shared this chart, right? This is an intraday chart on 11th of September. And we can see that it looks like the shape of Nike, right? The Nike's logo. So during that webinar, I was saying, is SPX trying to send us a signal with this shape intraday on 11th of September, right? So Nike's slogan is just do it, right? But just do what? I also don't know lah. But up to you to interpret, okay? But if you have interpreted it as just buy lah, okay? You have done your homework, you have done your due diligence. You do you, okay? So let's take a look at SPX on the 11th of September. This is the daily chart. Okay, so following my cursor, back in July, the mid of July, SPX made the all-time high, and then it fell, right? It fell until August, and then it do what we call a V-shaped recovery. And for second half of August, SPX has been trying its best to break the all-time high, but it couldn't do it. Okay, it couldn't do it. And then in early September, it fell again. Okay, so that was the picture back on our previous webinar. And then on that webinar on the 12th of September, we can see that it seems like SPX is trying to recover, all right, on this is daily chart. And if we look down on the MACD, right, we can see that it has turned up, right, following the MACD, it turned up. So it's an uptrend, upward momentum. And then we see the red labels, that means it's turning down, and it's turned down, And then on the 12th of September, it seems like, what can we see? We can see that it's like turning up, right? It's like turning up. And then the SPX intraday is having the shape of Nike. Just do it. So what happened after that? What happened from 11th of September to now? Let's have a look. Here we go. This is based on yesterday's close daily chart. And I've put a vertical line when was the previous chart last taken, which is 11th of September, the vertical line, remember? And then we also remember that the MACD was just about to cross. We are not sure yet. So we have to observe, right? So what happened? I don't know, it's on hindsight, but during that webinar is foresight, right? So we can see that if you have been following the market just on the daily chart, you can see that the very next day, the first cross has happened. MACD crossover, right? And then on the next day after that, the second MACD crossover. So to me, the uptrend has resumed. Okay, the uptrend has resumed. So if we can look at the MACD line, the blue color one, we can see that it's been pointing up until including yesterday. So the uptrend and the upward momentum, in my opinion, based on MACD, is still intact, right? Now, this is not financial advice. You do your own analysis. But as far as I'm concerned, the uptrend is still intact. Now, when will it turn? How long will it go? I don't know. I'm a trend follower. I'm a chart follower. I'll just follow the chart, the price movement, as well as the MACD and other technical indicators that I use to guide me on the path regarding SPX. Okay, so that is SPX. Now, do you want an additional tool to help you analyze the US market? If the answer is yes, then please allow me a few minutes to share with you a tool that I personally use, a tool that my team and I have built. Now, before I show you the tool, I want to share with you this concept called the tail that wags the dog. Have you heard of this expression? How can a tail wag the dog? Normally, it's the dog that wags the tail, isn't it? Now, not the case for US. All right. In the recent years, the US options market has grown so significantly that it is the tail now and is wagging the dog being the stock market. So what do I mean by the options market have become so huge? Let's take a look at this chart. We can see that from 20,000 up to last year, how much the volume have grown, like 10 times, right? So that's why the people who are trading the options, not just retail, but also the institutions, that volume has now influenced the stock market's movement. So what I have done and my team have done is that we have developed a tool called the Wealth and Joy Fear and Greed Index to analyze the US options market so that we can quantify the SPX market sentiment, so that it is a number, a simple number to tell us whether the SPX is bullish, bearish, or danger zone. Would you like to have that insight? If the answer is yes, then please join the Wealth and Joy Telegram channel by searching for Wealth and Joy in Telegram, and you can join it too. And that's where I will share the Wealth and Joy Fear and Greed Index. And how to use it, let me just give you a quick intro. Now, I have divided the chart, the Fear and Greed Index, into different zones. Basically, the greed zone when it's above 0. And above 0, if it's above 10, it is high greed. And then if it's above 50, it is extreme greed. Likewise, on the flip side, when it's below 0, it is the fear zone. When it's below minus 10, it is high fear. And when it is below minus 75, it is extreme fear. Right? So very clear, right? So when we are in, now market is usually in the high greed zone. So when it's in the high greed zone, I consider it normal. Market likely to move upwards. I don't expect any funny things to happen. But when it exceeded the zone into the extreme greed zone, which is what the first bullet point is saying, when it crossed into a new zone, from let's say from the high greed zone, from the fear zone into the extreme greed zone, or from the high greed zone into the extreme greed zone, I will pay attention, because it signifies that there might be some significant market shift that is happening. Right? So in a similar way, when it enters into the extreme fear zone, that is also very important, because when it's in the extreme zone, the chance of reversal is higher. So if we take a look at this chart at the bottom, you will see that it is on Monday, 2 days ago, the Wealth and Joy Fear and Greed Index is at plus 40. So we are in the high greed zone. So that's normal. So what can you do as an investor or trader, right? So let's take a look. So the Wealth and Joy, FGI, short form, right, will give you actionable insight. When it is in a high greed zone, like on Monday, plus 40, traders and investors can consider to remain long buyers, and option traders can consider bullish option strategies. Okay, so when you'll also notice that last couple of days, it has also exceeded 50. So that is extreme greed zone. So what does that mean? It meant that when it crossed into the extreme greed zone, the chance of reversal increases. Not a guarantee, high can go higher, but at least pay attention. Traders and investors can watch out for reversals and tighten your stops and take appropriate actions. Right? Just pay more attention when it went into the extreme zone. So I'm quite pleased to say that earlier in the month, on the 6th of September, the Wealth and Joy Fear and Greed Index have dropped into negative 76. Now recall that negative 76 is the extreme fear zone. And then on the Monday following that, it changed zone from the minus 76 extreme fear zone. It went back into the it went to minus 47, which is the high fear zone. So this is a shift. And whenever you enter the extreme zone, what happens? The chance of reversal is higher, right? So the Wealth and Joy Fear and Greed Index managed to spot that SPX bottom, in double quote, bottom, temporary bottom, right? So if you find, so for those who like to bottom fish, well, I guess that could be a good time to pick up some long trades, because you'll be entering at a low or recent low of SPX. Now, to me, the Wealth and Joy Fear and Greed Index is like a weather station, like a weather forecast. Now, if we see clear blue sky, that will be the greed zone, and we can leave the home without umbrella. There's a chance of rain is quite low. Doesn't mean it won't rain, but the chance of rain is lower, right? We can enjoy the day. But when the Wealth and Joy Fear and Greed Index is in the fear zone, then that's a storm. And if you go out, yes, you can don't bring umbrella, but I think bringing an umbrella will be a safer bet. Just earlier today, I have received this notice on my phone, and it tells me that there is moderate to heavy thunder shower in Singapore. So, and I was about to step out of my home to go and get groceries. So, do I bring umbrella or don't bring umbrella? So I brought the umbrella, and it did drizzle. Although it's not heavy thunderstorm, but it did drizzle. So my umbrella helps me. So if you want something like that to guide you in your US market analysis, please consider to join the Wealth and Joy Telegram channel to receive updates about this Fear and Greed Index. Okay, so that's the sharing I'd like to do about Fear and Greed Index. And how about yesterday? What was yesterday's Fear and Greed Index value? Very good question. Please join the Wealth and Joy Telegram channel to find out. Okay, I will be posting it very, very soon. And with that, I'd like to introduce the OTCS Club, the organizer for today. OTCS stands for Online Traders Club Singapore, and we are a non-profit society formed in 2005. We are a community of traders and investors here in Singapore and run by volunteers. To me, OTCS is a place where we network, share, and learn, and we do it through a series of workshops and webinars, courses, and our library. For workshops and webinars, we aim to have about 6 to 10 a year, and it is free for our members. These are some of the in-person seminars that we have held in the past few years. And for courses, we aim to have about 2 to 4 a year, and we normally will do a group buy for our members so that they can enjoy a better deal. And for our library, we have over $6,000 worth of resources in our library, in one of our committee members' office, but the library has been temporarily closed because of COVID, and we have not opened it yet. So again, OTCS to me is a place where we network, share, and learn, and we do it through a series of workshops, courses, and our library. And to join as a member, it is 120 Sing dollars a year, but for a time-limited period, it has been going for $60 a year. And since COVID, we have been making it free. So to find out more about our club, please go to onlinetradersclub.org. And if you just join us in the webinar on YouTube or in the webinar room, please don't forget to join our OTCS Telegram channel by searching for Online Traders Club, or join our mailing list, email mailing list, by visiting our website. And if you're watching us in YouTube, please don't forget to like, subscribe, and share. And yes, this webinar is recorded and is being streamed to YouTube. So if you want to revisit and watch later, please go to Wealth and Joy's YouTube channel. And at this juncture, I'd like to give a shout out to the OTCS crew. They are the unsung heroes. They are also volunteers in our members base to help us out to run in-person events. Thank you so much. You know who you are. And now the most important slide, the disclaimer. You are responsible for your own profits and losses. The speaker's opinions are their own and does not represent OTCS's opinions. OTCS, its office holders, associates, and sponsors are not responsible nor liable for your losses. And OTCS events are for educational purposes only and should not be construed as financial advice. When you are in doubt, please seek professional help. Later on during the webinar, please feel free to type in your questions for our speaker by looking for the chat box on the screen. If you're watching on your desktop computer, it will be on your bottom right. And if you're watching us on a mobile device, you will need to scroll up or down to look for the chat box. So please type in the questions anytime during the webinar. And at the end of his sharing, I will be asking the questions on your behalf. And with that, I've come to the webinar itself. And that is, the topic for today is how to retire rich investing in JB or Singapore properties. Now, I'm not a property expert, but we have invited a property expert from Malaysia to share more about this topic with us. So let me now hand over the stage to Faizul Rizwan. Faizul, please.
Hello. Can you guys hear me loud and clear?
Yes, I can see and hear you. I hope that has given you enough time to get home and settle down.
I did. I
Fantastic.
Thank you so much.
No, most welcome.
Right. So very quickly, I want to thank everyone, and I want to apologize for being a bit late. Part of my job is to hunt deals for my community. I think you guys are doing something similar for your own community, and it's very heartwarming to see, right? In fact, I was just speaking to a developer, and we're looking at a 45% haircut, right, versus original list price, right? So that's in a nutshell why I was a little bit late today. But having said that, very excited to speak today. I was told that this community is way above average from a financial education point of view, from an investment education point of view. So if you guys don't mind, right, I'm going to skip a lot of the fundamental basic stuff so that we can go direct to the data, to what is our buy call, right? Where do we see the market in the next 5 years? Is that okay?
Yes. Please take
All right.
over the screen.
Okay, let me just quickly hang on. Stop sharing. Okay.
Yes, I see your screen.
All right. Can you confirm that you can see it in full screen now?
Not yet. Full screen.
All right, cool. Okay, guys. So I've got like about 100 over slides. I don't know if I can run through everything very quickly, and I intend to wrap it up within, let's say, 1 hour of the presentation. And I want to leave a lot more time, maybe about 30 to 40 minutes, really answering questions, right? Because I think that's the key thing, right? So like I said, there's going to be a lot of a couple of basic stuff that I think I'm just going to do a recap. I'm going to do a summary rather than trying to explain, because I believe that this particular crowd today, a bit more sophisticated. I guess the basics isn't required, basically, right? So this is what you can expect for today. Number one, we're going to cover why people lost money buying property in Malaysia. All right, what is the common misunderstanding? Number two, how do you address the depreciation against Singapore dollar, which is our prediction? And how do you overcome that? Because there's no point making money buying Malaysia property. You make 50% gains only to lose out on 50%. You know, currency depreciation, right? So net zero, right? So we have a plan whereby you can avoid that, right? Number three, Singapore will become a lot more expensive to retire in. I'm putting a proposal of whereby you can basically retire as a T10, right? In your retirement instead of B50 in Singapore, right? Number four, how do you win in Malaysia? What kind of property that you should be buying? What is the criteria? How do you get better returns, right? And last but not least, is Malaysia entering a property bull run golden era? What is the opportunity available, right? This is basically the 5 part of the presentation for today. Okay. So I'll skip this, right? So a couple of interesting facts about Malaysia property. Number one, Malaysia property market is the only property market that you as a Singaporean, right, can actually buy with little to no capital. You can't do that in Singapore. You can't buy with little to no capital in UK. You can't do that in Australia. You can only do that in Malaysia. And the caveat here is that we are probably the only country now that you can do that. And I don't know how long will this last. Might take, maximum 2 years, maximum 2 years from now, that you will no longer be able to go buy property zero down or with little to no capital in Malaysia. All right, they're going to clamp it down. Okay. Number two, right? Historically, and this might shock some of you, right? That Malaysia property actually outperformed Singapore property in the last 30 years, right? So despite what has been said about Malaysia, the political instability, the depreciation, racial, stupid politicians, and many other things, and the corruption, and I heard, one of your minister got elected for accepting favors of hotel rooms and private jets, right? You should learn from Malaysia politician, right? How to do it better, right? So from a corruption point of view, we have done, I would say we are world class at it, right? This is not a proud moment for me. I'm just highlighting a fact, right? And yet, the property market has outperformed Singapore in the last 30 years, right? I'm going to show you the data shortly, right? Third point here is that the last bull run, property bull run, was in 2011. Next one should start this year, right? I'm going to again show you data later. Last but not least, if you were to buy in the next 6 to 12 months, you can actually do this one unique thing whereby you can actually buy below replacement cost. That means if it costs $600 to build, you can actually buy something today at 400, right? But again, that window will only be available in the next, maximum 12 months. After that, that opportunity will no longer be available. Okay, so this is the index. So if you compare, Malaysia is on the yellow line, Singapore is on the blue line. Whether 10 years or 20 years, or even if you stretch it over 30 years, Malaysia property market has actually outperformed, at least from an index point of view, right? So your average Malaysia property investors make more money than your average Singapore property investors in the last 10, 20, 30 years. Okay, so then, right, if Malaysia property is so good, then why does everyone that you know, potentially you yourself has invested in Malaysia, lost money buying property in Malaysia? Okay, so The most famous case study, I guess, is going to be Johor Bahru and Madini, whereby I would say 99% of the people who buy in Johor Bahru and Madini in the last 10 years all lost money. Right? So, by the way, Richard, can people comment or can people react? Not really, is it?
No, not really.
Okay, cool. Right. So I was about to ask, right? So then no problem. We'll just skip that, right? So basically, Johor Bahru Madini, 99% of the investors in the last 10 years who bought something here lost money. Right? So I call that the graveyard of the aspiring property investors. That's what Madini and Johor Bahru is as of today. And here's the reason why a lot of people who buy Malaysia property lost money. Right? It's this analogy called sheep, right? So this is a comment I've gotten from YouTube, right? So basically just trashing Malaysia property, zero appreciation, low rent, oversupply, unstable government, changing rules, growing anti-foreigner sentiment. It's just terrible, 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 terrible investment, right? This is a comment from Jochi. So my argument towards this is that, yeah, Malaysia property is bad if you're a bad investor, right? Look, you guys are a community of investors, right? At the end of the day, someone could buy the same stock just as you and lost money on their stock while you make money because you entered the right time, you entered the right price point, and you know when to exit, right? Most people who enter Malaysia market are completely clueless. That's why they lost money, right? So what is cheap basically means? The first bit here is that when you utilize Singapore mindset to buy Malaysia properties, so you think the market behave in a way, same way as how Singapore tenants, Singapore capital gain will behave, right? So the moment you begin to use this, right, you already lost the battle. Okay. Number two is that most people, when they buy the property, they buy using herd mentality. They didn't do the math. They simply buy because it was fashionable to own something in Malaysia 10 years ago. And they all buy the big bullshit about how Iskandar will become the next Shenzhen. Right? So I can tell you up front, Iskandar will never become the next Shenzhen. But in order for you to make money out of Iskandar, it doesn't have to be the next Shenzhen. Right? But when you buy based on what everyone else is saying, right, you're gonna tend to get hurt, right? So the last thing you want, and I think, you know, even as a stock investor or a property investor, you want to be a contrarian investor, right? So if I were to be very honest, my mentor in property investment is actually this guy called Warren Buffett. So I'm not sure whether you guys know him. I think you should, given that you guys buy stock, right? And I literally copied and deployed his buying strategy in stocks, but I just converted to property market, right? Like margin of safety, right? So I basically deploy his mentality in properties, and so far it has served us quite well at Far Capital, right? So the last thing you want to do is to buy when everyone is buying, and the best thing you can do is to buy when no one is buying, or when there's very little noise. Okay, so 10 years ago, when things are selling at 100% premium, a lot of people are buying because it was a fashionable thing to do. Everyone that you know of buy something in Malaysia. Today, if you ask around, the idea of buying Malaysia property, a lot of people will tell you, don't buy. My friend lost money, my uncle lost money, I lost money, blah, 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 blah. This will be the time to buy, because today you get to buy 50 to 70% cheaper. That's right. Today, guys, we are buying at 50 to 70% cheaper compared to the price point 10 years ago, right, in Malaysia, right? Be fearful when others are greedy, be greedy when others are fearful. Similar to the greed index that I saw just now, okay? Number three, a lot of people got the entry and exit wrong. So you entered, 10 years ago is too early. The time to enter Johor is today. But today, no one wants to enter Johor. Very little people want to enter Johor because, again, a lot of people lost money entering 10 years ago. Okay? So, in order to make a lot of money, you have to buy the right price point, you have to buy the right timing, and then you have to exit, obviously, at the right time. Okay? The time to enter Johor Bahru is 10 years ago. No, 10 years ago is the wrong time. Today is the right time. Okay? And when do you exit? Not today. because prices are depressed. As of today, right? It's quite low. So what you want to do is that you want to exit in the next property bull run, which we think will peak in the next 3 to 5 years. Okay, that will be the time to exit. Okay, number 4 is always going to be about the numbers and the economics, right? And a lot of people did not do the math, right? The math that they use is the math that the agent give them or the property developer does it, gave them, which is normally going to be an inflated math. So the millennials who call it the math is not mathing. Okay, so who's going to rent from you? How much can they rent from you? What is the total addressable market? How big is the demand? What's the competition like today? What's the current and upcoming total supply and competition? So people who buy Johor property lost money in the last 10 years, or Malaysia property lost money, has never done the math, right? And last but not least, right, when you enter at the inflated price point, whether you buy a property or you buy stocks, the outcome will normally be the same. You're going to lose money. Okay? You got to make money on the buy. You have to buy below market. Okay? So when you combine all these 5, it becomes sheep. Sheep is S is Singapore mindset, H is herd mentality, E is the entry and exit, the other E is the economics, and number 5, which is P, which is price. So sheep, right? So if you avoid sheep, you are going to be able to go make money in Malaysia. Okay? And guys, as you know, right, what happened to sheep? In the end, they all get slaughtered. Right? So, don't be a sheep. Okay? So, that's the first bit, right? Whereby why people lost money, right? So, you are wondering, if the data is correct, right? Whereby a lot of people make money out of Malaysia property, then how come most of the people that you know lost money? So, I already explained, if you use sheep in any of the 5, you are bound to lose money. Now, let's say you are the 1% who was able to buy something in Malaysia in the last 10 years and you actually make money from capital gain and cash flow. Yet, at the same time, the ringgit has performed terribly bad to the point whereby, yeah, you could make 30% gain on the property. But the reality here is that after taking into consideration the foreign exchange rate, you actually lost money, right? So the reality here is that it's always going to be a risk, okay? And I can give you the news upfront that the ringgit and the Singapore dollar relationship is designed in one way and one way only. The ringgit should continue to depreciate against Sing dollars, and the Sing dollars should continue to appreciate against ringgit. Why is this happening? This basically started in 1985, right? 1985, when both central banks decided to do monetary approach depending on the country that we trade in, right? So it's called the Plaza Accord, right? Starting from that, right? So Singapore Central Bank today manages the currency, right, against certain basket of currencies. Okay, look, Malaysia ringgit has got no business to be strong in comparison to Singapore dollar simply because Malaysia exports stuff to Singapore and Singapore imports stuff from Malaysia, right? The two countries are key trading partners. Okay, if ringgit continue to strengthen against Singapore dollars, it's going to be a big problem for Singapore simply because you guys import a lot of food materials coming from Malaysia. So things are going to be a lot more expensive. Inflation is going to go up. Okay? So this is a statement that actually came from Monetary Authority of Singapore, which is MAS, right? It has already indicated that the Singapore dollar is managed against basket of currency versus our major trading partners and competitors. Right? Very, very clear. And I don't know whether you have watched this, but if you haven't, please watch it. Right? It's Singapore Reserve Review. Right? Now, if you watch the I think 2-hour documentary, which I really enjoy, okay, Every time they talk about currency management and exchange rates, the first currency that is mentioned by your prime minister all the way to your finance minister, right, will be the ringgit. Okay? Don't believe me? Go and watch it. It's not even US dollars. Ringgit is the first currency being mentioned by both. Okay? So it's very clear, right? Combined with the statement by Singapore, by MAS, right, together with the Singapore Reserve, that Singapore dollar has to maintain a certain parity of strength versus its key trading partners, especially versus its key import partners. And Malaysia is a key import partners. Okay, Malaysia government like doesn't really, in a way, care whether the ringgit strengthens or de-strengthened against Singapore dollars, because if the ringgit is weakened, guess what? More and more Singaporean will come to Malaysia to go and spend money in Malaysia. So it's good for us, right? More exports can be made to Singapore, right? So we don't care, right? So which is why if you watch the Singapore Reserve Reveal, it gives you a very clear insight how does the reserve and the currency exchange is being managed today by Singapore government. Okay. So my prediction here is that if you are worried about investing in Malaysia because of the currency depreciation, worry not anymore, because I can confirm you it's going to happen. And in fact, it's just a matter of time, right? That one Singapore dollar will be equivalent to 5 ringgit, right? How fast will it get there? It really depends on how stupid is the ministers that we have in Malaysia and how good they are at managing our economy. The worse they are, the faster this prediction will become, right? The better that they are, this can be a 10-15 year story. But will we ever get to a 1 Sing dollar versus 5 ringgit exchange rate? I can guarantee you it will happen in the next 20 years. All right, eventually it will get there. Okay, because the currency exchange rates, right, from a strategy point of view, has already been decided in the last 20 years. Okay, so if you already know that the Singapore dollar will continue to appreciate against Sing dollars, against ringgit, sorry. So what is the strategy here, right? The strategy that I'm recommending, right, for all of you is to use as little cash as possible to buy a property in Malaysia. Better still, you use zero cash, right? So I was made to understand there are two categories of people who are in the webinar tonight. Number one, you are still working in Singapore, right? Number two, you are a retiree. Okay? So now, if you are still working in Singapore, you shouldn't have any problem getting a 100% loan buying any property in Malaysia. So therefore, if you don't use any capital to buy anything in Malaysia, you're not going to lose anything from a currency exchange point of view. Is that clear, guys? What I'm recommending, if you are still working and you can get a loan, is to use little to no cash, right? Don't convert anything to ringgit. Okay, that is my proposition to you, because if you don't convert, you don't have a currency depreciation risk. Now, what about those who are already retired, don't have a job, cannot get bank loan, right? You got two options if you want to continue to invest in Malaysia. Number one, you buy cash, right? Which is not my recommended strategy. Okay. Number two, you purchase together with a family member who is actually working as of today. So basically, you leverage on your working and borrowing capabilities to buy and own something in Malaysia with little to no capital. So again, I'm not telling you the Malaysia property market is wonderful, therefore just buy property here, it's going to make you more money compared to Singapore. That's not what I'm saying. Okay? If you buy the right property, you will make comparable returns compared to your Singapore property. But if you use a lot of cash, you're going to have currency depreciation risk. So how do you reduce that risk to zero? you use little to no capital. Okay, clear, guys? Eh? On how do you manage currency depreciation of ringgit versus Singapore dollars. Right? Now we go to the third part of the presentation. How do you retire comfortably from a B50 in Singapore to a T10 life? T10, so top 10% life, right? So basically, Singapore is one of the wealthiest, right, country in the world, right? So 13% of Singapore population is expected to become millionaires. But the reality of this is that a lot of this net worth is actually driven by high property value. So in a way, you are asset rich, but cash wise, not necessarily you have 1 million Sing dollars in the bank. Okay? And if you are staying in Singapore in retirement, your property, the one that you stay in, is not actually an asset, it's actually a liability, right? To me, asset puts money in your pocket every month, liability takes out money from your pocket every month. So, while property generally can be an asset, but your own stay property will always be a liability. Okay? So, my proposal to you is a simple one. If you own a property in Singapore, or either HDB or condo, and the property ownership rate in Singapore is about 93% of today, so I think a significant majority of you watching today are actually already a property owner. Okay, so again, if you continue to stay in your property is a liability, it's not an asset. So my recommendation to you and my proposal to you as of today is to consider retire in Malaysia so that you can rent out your HDB or condo. All right, from anything between the 3,000 Sing dollars all the way to 6,000 Sing. So that translates to you getting roughly a ringgit income of 10,000 ringgit per month to about 20,000. Okay. Step 2, you rent or buy something in Malaysia, because at 2,500 ringgit, 4,000 ringgit per month give you access to a lot of very good high-end condos in either JB or KL, right? If you want to be nearer to Singapore, you stay in JB. If you foresee that you're going to be wanting to come back to Singapore once or twice a week, stay in Johor, right? But if you want something comparable to KL from a lifestyle point of view, then you'll be better off exploring retiring in KL. Okay? And today, for 2,500 to 4,000 per month, give you access to a lot of high-end condos in JB or in KL. So, you stay in HDB in Singapore, but when you move to Malaysia, you get to stay in nice, high-end, new condominium. Right? So, your liability in Singapore becomes a proper asset, and then you use the proceed from the rental to go and stay or own something in Malaysia. Okay? And here's the best part. You collect 10 to 20,000 ringgit after conversion, but the rental that you pay is only 2,500 all the way to 4,000. So therefore, you can use the surplus from your asset in Singapore to fund your retirement lifestyle in Malaysia. So you go from potentially a bottom 50 from an income point of view in Singapore to become a T10 in Malaysia. So you live very comfortably, right? Guys, if you can rent out your condo for 5 to 6,000 Sing, you're going to have roughly about 10,000 ringgit of surplus cash after rental. That is a lot of money. You can eat out every day and still you could not finish, right? A budget of 200 ringgit to 300 ringgit of meals out every single day, right? So you can choose to become a poor millionaire in Singapore, whereby it's high net worth, but cash poor, right? And cost of living is very, very, very high in Singapore. And I've got bad news for you. It's not going to be lower in the next 5 to 10 years. In fact, it's going to be even more expensive as Singapore set to compete with Hong Kong, right, as the capital for Asia Pacific. Okay, all the wealthy people out of Asia will now looking to have a pad or a footprint in Singapore. So Singapore is going to become, well, it's already becoming the Swiss, right? So it's not going to be cheaper, right, from a cost of living point of view. So the smarter way here is that keep your Singapore asset, rent it out, go and stay in somewhere which is a lot cheaper. Take advantage of the currency strength, take advantage of the high rental demand out of Singapore. Okay, clear guys, 4 step. Rent out your property out of Singapore, go and stay and rent somewhere in Malaysia, right? Then you can use the surplus from your rental out of your Singapore property to actually live very comfortably in countries like Malaysia or Thailand or Indonesia, whereby cost of living is half compared to Singapore, right? And from a quality of life point of view, I would say for that 10,000 ringgit, you enjoy a far greater, far better quality of life compared to 3,000 Sing in Singapore. All right, that's just a fact, like guys. I already have a couple of friends who are basically even young guys, right? Multi-millionaires out of Singapore, who today their main base is in Malaysia, right? And every day he eats steak, because the steak here costs only 15 Sing dollars, right? It's too cheap. Hang on. Can you guys see my slide still?
No, now we're seeing your Safari.
Right. Hang on.
Maybe you click on PowerPoint. Okay.
Okay.
Present.
Mana?
Your slide. Full
Let me
screen.
just, yeah. Okay. So we come to the fourth part, right? Strategy for buying property in Malaysia. So this basically is the tip lah, how you buy better compared to most Malaysian. How do you avoid the fate of 99% of the buyers out of Singapore who buy Malaysia property and lost money in the last 10 years, right? So just now I'll show you why they lost money. Now I'm going to tell you how, right? You can avoid that, right? Number one, you got to buy property that fulfills 3 criteria. What is our 3 criteria? Here is that, right? You got to buy property that you don't mind staying in it for your retirement. It's nice enough that you want to stay in it. When you rent it, you can rent it not at a loss. And the third one here is that you buy below market so that at any point of time you can sell, and you can sell not at a loss. Very simple thing to remember. Can stay in it, can rent it without loss, can sell it without loss. Okay? If you fulfill these 3 criteria, you're going to be okay buying something in Malaysia. You're already better than 99% of all of the investors out of Singapore who bought something in Malaysia in the last 10 years and all lost money. Okay? So, number 2, right? Second criteria is that you got to make sure that whatever you buy in Malaysia, you enter at the lowest price point. So here's the problem, right? For a lot of people who lost money buying Malaysia property, they lost money because they often overpay. And here's the worst part. Think properly, guys. The Malaysia property developer who come and join all this, property expo in Singapore, do they sell you cheap properties, or do they sell you overpriced property that the locals don't buy? Right? So it's the second, right? So most of the time, when you enter Malaysia, you don't enter the lowest. In fact, you pay a premium versus a local. Right? Because the local get to buy, let's say, 700 ringgit per square foot, you pay 900 ringgit per square foot. Because to you, 900 ringgit per square foot is still under 300 Sing dollars per square foot, which is cheap. You cannot get anything in Singapore. Right? So it's very important that you buy like a local and you enter at the lowest price point. And not just about the lowest price point, right? You got to make sure that your buying price is the lowest. Your repayment is also the lowest. So you got to get the right banking loan. And last but not least, your entry cost or your cost of purchase is also at the lowest price possible. Okay? If you buy the lowest price possible, lowest repayment, and the cost from a cash point of view is the lowest point, you have very little risk buying anything in Malaysia. Okay? The third one, right? You have to make sure that what you buy before you come and stay here while waiting for you to come and potentially retire here, you got to make sure that what you buy can get tenant. Because tenant want to pay you more than what you need to pay to the bank. All right? So long story short, you can get positive cash flow. Okay? So how do you do it? You got to buy property that fulfills 7 criteria. So these are our 7 criteria, right? I think as a bonus, we're going to share you the 2-hour video of us explaining the 7 criteria, right? So, and the last part of 7 criteria is this thing called MRO, which stands for multiple rental options. So that means you got to buy property, guys, whereby you have multiple rental options. So what does this basically mean? You got plan A of rental strategy, you got plan B, you got plan C. So if plan A doesn't work, you can do plan B. Plan B doesn't work, you can do plan C. Okay? The worst property you can buy in Malaysia today is the property whereby you got only one rental option, and most of the time, these are property that they sell you to ask you to go buy Genting, some beachfront property, KLCC property to go do hotel. So anything with daily rental typically is the worst property that you can buy. So, like I said, I'm giving you a free tip right now. Anything with either a guaranteed rental return or they sell it as a daily rental is the worst property you can buy. Okay, because the reason why they use daily rental is simply because if they use any form of other rental option, it's not going to make money. Which is why they try to scam you, they try to con you into thinking that you're going to have a phenomenal opportunity trying to rent it on a per day basis. Okay? Remember, guys, in property investment, either in Malaysia or Singapore, it's always going to be a 50-50 rule. The first 50, you buy right property at the right price point. Right? The last 50, which is the most important, is to know what to do with the property after you have bought it. Right? Because you could buy the right property, right price point, but you did horrible rental strategy, you're still going to lose money. Okay? So you got to get the price point right, you got to get the property right, and on top of that, you still have to know what to do with the property after you have bought it. So if you buy a property whereby the only way you can make money on a positive cash flow by renting it on a short-term basis, which is daily rental, that's the worst property you can buy today in Malaysia. Okay? So you got to make sure every property that you bought, on top of you buying it cheap, you need to make sure that your property has got minimum 2 viable rental option. The more, the better. But minimum, you need to have 2 lah. Okay? Now, what happens when you have minimum 2 rental option? You get your units to be tenanted, fully tenanted in the first month, you get positive cash flow. Just like Ismail here. Right? So, Ismail here do room rental, co-living. This one also do room rental and co-living. This one did a mix of room rental, co-living, short-term, medium-term, long-term. Alright? Because Irfan here owns 24 properties after becoming a Far Capital client 8 years ago. Okay? I got William here, right? Who, as a student, right, is able to own 2 properties and get positive cash flow, right? As a student of university, right? I got Rizal here, managed to rent out his unit within 2 weeks, right? And this one is our latest deal in Johor, since we are talking about Johor and KL, right? Today we are buying this at 580,000 to 660,000, and the gross rental that you can get as of today is above 7% rental yield. In fact, I've just gotten the information today that there are some units here you can get almost 10% gross yield. Because why? Rental, whole unit can fetch more than 5,000 per month versus a purchase price of just 600,000. Right? 5,000 per month gross rental, 60,000 a year versus a purchase price of 600,000. So, your gross yield is above 10%. So, like I said, 99% of the property investors who bought anything in Johor Bahru, Medini in the last 10 years all lose money. And these are your exception. Why? Buy at the right price point, use the right rental strategy. Okay? So this one is our deal last year whereby we did a deal at 50% discount, whereby we are buying a property that is walkable to Pavilion, Bukit Bintang, and also TRX, right? It is comparable to you buying a property in Singapore that is walkable to Orchard Road and also walkable to Marina Financial Area, right? And we bought at 50% discount, 1,200 ringgit per square foot. All our Malaysia clients, Singapore clients don't use any money to go and buy this. In fact, they get cashback when they buy this. And the cashback is, one of them got 1 million ringgit cashback because they bought two, right? 1 million ringgit cashback, roughly about 300 over thousand Sing dollars cashback. And here's the best part. Today, the rent unit has been completed last month, and we already have a couple of clients who is able to go and rent out. And the maximum rental that we are able to go and find, locked for 3 years rental, is actually 6,000 ringgit per month. That translates to close to 10% rental yield again. So again, after buying property with little to no capital, right? Not only get buy to little to no capital, they actually get cash of 300,000 all the way to 500,000 ringgit, and still can potentially get positive cash flow. Okay, so guys, you'll be wondering, how the hell did we purchase property at 30 to 50% discount? Okay, very simple. We don't buy one unit, we buy a lot of units. So unlike stocks or unlike equities, whereby you have to buy from open market, we can negotiate with property developers who has got unsold inventory, overhang stock, right? So like I said, I was late today because I was attending a meeting with a developer that has got roughly about almost 800 units of unsold inventory in multiple projects, right? So when I go there to them, and if I want to buy just one unit, I'm not going to get a 20 or 30% additional discount. But if I'm buying 50 units, right, they'll be a lot more motivated to give me higher discount because I'm guaranteeing them good sales. Minimum 30 to 50 units. So, long story short, if you are a durian lover, if you buy one whole lorry, 1 ton of durian, you get at a completely different price point, or Musang King. But if you just buy one piece of Musang King, you pay retail price. Okay? So, we are a bulk purchaser. We are investment group, right? So, therefore, these are typical price point for projects. When you become a retail investor, you pay 700 all the way to 750 ringgit per square foot. If you associate, property agent, banker, you pay 600 to 670. But as a bulk purchaser, you pay 450, right? In fact, we did a deal last year with a public listed property developer in Johor, right? Whereby their managing director paid 800 ringgit per square foot to go buy this property after all of the discount. Public paid 950, he paid 800, we bought in at 500 ringgit per square foot only. So we get it cheaper than the managing director of that public listed company. Okay, so it's basically group purchase. We buy a lot. Obviously, you buy one unit, but there's going to be 50 and 100 of you that we represent. Therefore, we use our cumulative buying power to go and negotiate a much lower price point. Therefore, you get to buy this at the significant discount. Okay, so just to give you an illustration, how hard do we negotiate? Okay, this is a property in Danga Bay, right? It was selling for about 1,000 ringgit, 1,100 to 1,200 ringgit per square foot many years ago. Okay, we entered last year at only 460 per square foot. So here, original selling price is 1.2 all the way to 1.8 million. And here we are buying at 500,000 all the way to 630,000. Right? This is a 65% discount. Property with sea view is in Danga Bay. Right? So today, there's no other group in Malaysia that buys cheaper than Far Capital clients. We are the largest buying group in Malaysia, by the way. Okay? Right? So this deal is in Dutamas Mount Kiara. Again, we tend to buy cheapest. So every area that we go, we buy the cheapest inventory in the last 10 years. So Danga Bay, no one has bought, right, at below 500 ringgit per square foot other than Far Cap clients in the last 10 years. No way, no one. Okay? This is Dutamas. No one has bought at below 650 per square foot in the last 10 years other than Far Cap Plain. Right? This is in Petaling Jaya. No one has bought at below 600 ringgit per square foot in this area in the last 10 years other than Far Cap Plain, who paid 500 to 550 per square foot. Right? This is in Maluri. No one has bought any property below 600 ringgit per square foot in Maluri area other than Far Cap Plain. Right? This is in Johor Bahru. This is in Madini Tier 1. No one has bought any property at below 400 ringgit per square foot in the whole of Madini, or below 500 ringgit per square foot in the whole of Tier 1 in Johor Bahru, other than Far Cap Plain. Right? This deal, we paid less than 400 ringgit per square foot. Original SPA price was more than 1,000 per square foot. This is a luxury property bought at a fire sale price point. Okay? And again, this is Bukit Bintang, walkable to Pavilion, walkable to TRX, right? So, we bought at 50% discount, 1,200 ringgit per square foot. Again, no one has been able to buy property in this area for new property at the price point that we are buying. Okay? So, the reason, again, why we can get the discount is because we put a lot of deposit. We give them a guaranteed sales, minimum commitment of 30 to 50 units. And therefore, we are able to go and get a bulk price, bulk discount. Therefore, even our Singapore-based client, right, who is not even in Malaysia, is able to buy cheaper than all the Malaysians out there, which is not a Far Cap client. Crazy, yeah? As a foreigner, you buy cheaper compared to locals, right? That's what happens when you have unfair advantage, when you have volume. Okay? So, and again, like I said, we got clients who are able to get 150,000 cash back. So not only they did not use money to buy property, they actually get 150,000 cash from buying a property in Malaysia. Okay? So, my last part of the presentation, right, is talking about the economic outlook of Malaysia and my prediction for Singapore. Okay? So, my Singapore property market prediction here is that the US has begun to start cutting interest rate, which is the Fed has started cutting interest rate, which most likely will also trigger an interest rate cut in Singapore. Okay? So guys, long story short, every time when there's a 100 basis point of interest rate cut, right, in either developed or third world country, that normally triggers a property bull run. Because why? Interest rate becomes cheaper, borrowing cost becomes cheaper, right? Typically, people want to buy more property, right? Because things are cheaper from a borrowing point of view, right? So we suspect that the Federal Reserve decision to reduce interest rate, which is long time coming, right, will force MAS to actually reduce interest rate to make it comparable to US dollars. Again, they have to maintain, right, Singapore's strength from a currency point of view against basket of currencies. Ringgit is one of them. US dollars is a key one. Okay, so inevitably there will be a rate cut in Singapore as well, right? Which will most likely trigger a property bull run in Singapore. Okay, I don't know whether you guys are aware, but property prices and rental in Singapore has gone up crazy since COVID, right? Minimum 50%, right, of higher rental, right, and 30 to 40% of capital gain in Singapore. So again, that has happened because of the interest rate cut during COVID. Okay, so every time they cut interest rate by more than 100 basis point, it will normally trigger a property bull run in Singapore. Okay, second thing here is that I've been to Hong Kong recently as part of my market visit to Hong Kong and Shenzhen to study the property market there. I have very strong belief that Singapore will actually overtake Hong Kong as the most expensive real estate in ASEAN. And as of today, Singapore is half price compared to Hong Kong. Okay. However, from an income point of view, Singapore is only 20% lower compared to income of Hong Kong, average household income in Hong Kong. So your property market is half price, but from an income point of view, you only have 20% discount. So, given that Hong Kong is in turmoil and China growth is slowing, and Singapore has very smartly positioned itself as a gateway to Southeast Asia, there's no doubt in my mind that if I were a multinational company looking to set up shop in Asia, Singapore would be my first choice. Okay? So when there's more jobs, high value jobs being created, naturally demand for property will also go up. So the dumbest thing anyone can do here is to sell off their Singapore property, knowing that there's going to be interest rate cuts, and number two, Singapore will overtake Hong Kong, right? So if Singapore property doubles its value compared to today in the next 10 years, Malaysia will become a beneficiary as well. Because there's going to be a bunch of people out of Singapore who think Singapore is too expensive to stay in, right? And if they rent out their Singapore property, they can retire like a king in Malaysia, right? So it makes no sense as a retiree to stay in Singapore. Unless you are the T20, you are the top 20 from an income point of view, right? You got a passive income of 10 to 20,000 Sing dollars per month. Then yes, it makes sense to retire in Singapore. Otherwise, your quality of life is so much better, right? If you retire in Malaysia and leverage on your Singapore property as a real passive income. Okay? So again, I don't own any Singapore property, right? It pains my heart as a Malaysian to say this, but Singapore is very well run, very well positioned, right? To take over from Hong Kong, right? So my last trip to Hong Kong confirms that. Hong Kong is just depressing because in the last 4 years, you guys had a property bull run. Hong Kong has got a property crash. Both raised interest rate, right? Yet Hong Kong had a property crash. Singapore had a property bull run, right? And why is that happening despite both countries are pretty similar from an income point of view, from a make point of view, right? Is government policy, economic stability. Okay? So, these are some updates about Malaysia, right? So, we are already, I think as of today, we are strengthening about 12% against US dollars. We have now strengthened 6% versus Sing dollars. And we'll most likely continue that simply because the ringgit cannot afford, in a way, right? Central Bank of Malaysia cannot afford an interest rate cut. And why can't they afford an interest rate cut in Malaysia, unlike Singapore, is because of this. First half of 2024, property transaction grew by 24%, guys, versus last year. So at the current interest rate, we grew 24% year on year from a property transaction point of view. Right? So it's 24%. This is bull run transaction numbers territory already. Okay? We've been predicting, right, since year of 2020 that we're going to have a property bull run happening in 2024. So I'm not sure if has there been anyone who followed me, right, back in 2020. But in 2020, I told people that we are now in a slump recession. We're going to most likely have a recovery in 2022, 2023, and 2024 will be the beginning of property bull run. Okay? So far, right, our prediction has been quite spot on, even if you go back as far as 3 years ago. So, look at the transaction. It's very clear, right? These are key highlights from NAPIC. Long story short, like I said, the key thing is that both transaction and value of property has hit a record high. And there's a probability that 2024 might be the best year ever from a property transaction point of view, right? And here's what's the worst part. If you look at the number of property projects that is being started since COVID happened, we are still below pre-COVID numbers. So if you look at the property supply of start of new property in 2019 first half, right? In total there, you got roughly about 69,000, right? 69,000 of new property being launched in first half of 2019. And when you compare today, that number versus 2024 first half, we are still way below pre-COVID number. So what does this basically mean, guys? It's similar to Singapore. Because of COVID, it has triggered a couple of changes. So number one here is that the cost of construction has gone up. Okay, a lot of developers don't want to start new project because they don't think they can make money in Malaysia, right? Because now profit margin now is in single digits for some developers, for some projects. So they are hesitant on starting new project because why? If you launch something expensive, no one wants to buy, right? If they launch cheap, they lose money launching a property. So therefore they hold back. So as of today, you got a unique problem of whereby property transaction now, right, is going at a record high, yet from a supply point of view, is still lower compared to COVID. So there's going to be a squeeze from a supply point of view. The number of buyers are getting higher and higher thanks to bull run, but from a supply point of view, it's not getting higher and higher, right? So normally when you have undersupply of a property and the number of buyers goes up by 20 to 30%, that will normally force property values to go up. All right. Short summary, undersupply, demand has gone up. So what will happen? Prices will actually go up. Okay. So again, just to highlight to you, the first half of 2024, we did 199,000 roughly transactions. Look at the bottom here. Last year, first half of the year, we only did 184,000. And last year was the best year, right? Over 10 years in terms of property transaction. Third best year in the last 23 years. So 2024 transaction most likely will be comparable to at the beginning of the last property bull run of 2011, which is 430,000 transactions a year. Okay, so there's a very strong chance, above 50% possibility, 2024 will be the best ever year from a transaction point of view. Okay, so from an equity point of view, very large trading volume lah. All right, very active trading volume. Okay, then as far as Johor is concerned, Johor has already had a property bull run starting from last year. Okay, so this is just to give you a sense, right, of how crazy things are in Johor. These are properties that we entered in Johor. Like I said, many people who entered Johor in the last 10 years lost money. Why did they lose money? They entered the wrong time, they entered the wrong price. And they bought the wrong property, the wrong rental strategy, right? We entered the right time, we buy the best possible price, and we use the right rental strategy. So when we launch a property, typically we tell people this is how much rental you can expect, right? So you can see a projected rental during our launch. So we indicated. So when you become a client, we tell you, when you buy this property, this is the expected long-term rental, right? Let's say, for example, the Medini one, right? Because Medini is always the, the joke, right? Because, everyone lost money in Medini. We projected rental 2003. Today, the rental is highest 3,002. Average asking is 2008. That's a 40% increase, guys. Right? In some of the units, whereby we projected rental of 3,000, today we've seen the asking price of 9,000. Right? That's a 200% increase in less than 2 years. Overall, our Johor portfolio has done very well, whereby what was projected versus what is the actual today, we are seeing a 33 all the way to a 50% increment of rental in less than 2 years. Right? So why Johor is doing very well? Again, thank you Singapore. Because rental in Singapore has gone up by 60% in the last 3 years. Right? So when Singapore cough, Johor sneeze. Right? You cannot have a property bull run in Singapore and Johor continue to be cheap. Okay? Clear, guys? Because Johor is highly dependent on Singapore. So if Singapore property market does well, you can bet, right, your life that within 2 years, Johor will follow suit. It's not going to be immediate. We are normally a slow starter, right? You guys are the big brother. Johor is a small brother. Okay? So this is summary for Johor rental. Like I said, did very, very well, right? And will Johor and Iskandar get a lot better? We bet potentially can, because just last week, right, Forest City is now labeled as a special financial zone with 0 to 5% corporate tax. So what does this mean? A lot of companies will begin to set up shop in Forest City to enjoy a 0 to 5% corporate tax, right? So more companies setting up shop in Johor means more jobs going to be created, right? And in some ways, to compete with Singapore, the special financial zone in Forest City will also have 0 tax for family wealth office. Okay? By the way, this is only for Forest City. There's going to be a major announcement coming up soon during our budget 2025, which is going to be next month, whereby Merdini will also enjoy the status of special economic zone. Right? It's not going to be as good as Forest City, but again, it's going to be a special economic zone, so Merdini will become one of the largest winner, right, out of special zone incentive, and by far the most important infrastructure project that Malaysia need, which is the high-speed rail. Right? The king is there in China last week to meet with the Prime Minister of China, right? And one of the agendas is going to be the high-speed rail. Okay? So, things are looking very exciting. So you get the lowdown of a lot of insider news of what's happening, rental market and all of that. So I'm just going to summarize today's sharing before we move to client package introduction and then Q&A, right? So I'm not pitching you to abandon Singapore property, buy Malaysia, and buy Malaysia is best. No such thing. Singapore is the best property market you could own. Unfortunately, Singapore, you cannot own 5 properties without using a lot of cash, right? So own 1, 2 in Singapore, the rest of them buy in Malaysia. Because in Malaysia, at least in the next 6 to 12 months, you can still buy something with little to no capital. And this is only unique for Singaporean. If you are American trying to buy something 0 down in Malaysia, you can't. Because Malaysian bank don't like American. We only like Singaporean. Malaysian bank only friendly towards Singaporean only. Even Bruneian don't have the same privilege of getting 80 to 90% loan. Okay? So it's your birthright being a Singaporean. So the smart thing to do is to take advantage of this while you still can. Because I can assure you, if the property transaction continue to be the way it is as of today, you've seen 2024, most likely is going to be a record year. Next thing that will happen is clamp down will begin to happen. Okay? The market will be less friendly towards foreigner looking to buy Malaysia property. So while the market is loose today, we are very welcoming. Take full advantage of it. Okay? Number 2 is factually, and from a data point of view, if you buy the right property in Malaysia, it can beat the returns out of Singapore. But that can only happen when you buy the right property. Buy wrong property, 99% of the Singaporeans buy wrong property in Malaysia, they all lose money. So you got to buy right. Okay. Third, you already know why people lost money buying in Malaysia. They are sheep, right? That's why they get slaughtered. Okay. I'm hoping after tonight, you do not join them, right? Become smarter, right? Number 4, while buying something in Malaysia, not only if you buy the right property, you can make money out of it, you could also use this as a possible retirement home, right? So you can get capital gains out of it, potentially can get rental return, and on top of that, you are putting a footprint to potentially retire in Malaysia. So plan A, plan B, plan C, right? And with the high-speed rail, if you stay in Kuala Lumpur, you want to go to Singapore, it's less than 2 hours, right? So it's going to happen. Fifth, you already know, right? If you buy a lot of property, 30, 50 units one go, you can buy cheaper than most local Malaysians, right? So when you buy something in Malaysia, make sure that you have unfair advantage. Last but not least, the data is very clear. We predicted this back in 2020 that Malaysia will enter a property bull run after COVID in 2024. Look at the data of today, first half of 2024, very clear. Will most likely have one of our best years ever, right, in the history of Malaysia property 2024, right? So timing-wise, the best time to become a client is actually 1 year ago. Second best timing is, well, today lah, right? So this is a 4-step to retire comfortably. Leverage on your asset in Singapore. Please don't sell your property in Singapore because, like I said, Singapore property market should be comparable to Hong Kong in the next 10 years. So there's an upside of 100%. So don't be the idiot who sell it too early, right? No matter how much you like or don't like your government, right? You like or you don't like them, you have to agree that they have made the right policy, right? And as an owner of a property in Singapore, you're going to become a significant beneficiary. So don't sell it, right? Keep it, right? Because the value is going to go up. Your rental will most likely go up too, right? So leverage on your single property to retire comfortably in Malaysia. That's the theme of today's presentation. Okay? Right? This is how we buy at a significant discount because we buy 30 to 50 units, right? So you buy property in Malaysia, just make sure your buy price, your repayment entry cost is at the lowest price point, because if all of this is low, there's no way you can lose out even to Malaysian investing in Malaysia, right? And you get full unfair advantage when you buy cheaper than everyone else, right? You can buy and own property in Malaysia using little to no capital, right? And when you buy a 30 to 40% discount, you pay 0% tax on profits, right? Which is wonderful. Doesn't matter who takes over and what's the interest rate on tax, you pay 0 tax anyway if you buy a 30 to 40% discount, right? You can get 100% loan as of today, potentially even more from a cashback point of view, right? And when you buy the cheaper price point, you can sustain versus 95% of the other owners, right? You can buy cheaper compared to most Bumi Malaysia, and you can even buy cheaper compared to the required stat threshold. So that means if you buy a 1 million ringgit property but you get a 40% discount, you are actually paying 600,000. But you're not supposed to own a 600,000 property in Malaysia, but you can because you get significant discount. So remember this property, guys, that I said we buy at 50% discount. Client took 300,000, half a million cashback. Even my Singapore clients can get half a million cashback. Okay, I just got the data today, right? We've got 3 units because the property was only ready last month. So a lot of units undergoing renovation. So this unit got rented before, actually on the same day it was handed over by the renovation contractor, secure a 2+1 year tenancy at 6,000 per month. Guys, he bought this property last year, 750,000. His gross rental now is 72,000 a year versus 750. It's almost a 10% gross rental return, guys. Right? Crazy. Okay. This is in Bukit Bintang, walkable to TRX. What about Johor? 380 ringgit per square foot, right? 65% cheaper. This is again data today. If just now is long-term rental, this one is doing co-living, you rent per room, right? You can see here revenue is 5,000 to 5,002 per month, right? That means annual gross rental is about 60,000 versus a 600,000 ringgit property. So again, gross rental yield is almost 10%. Okay, and it's not just one unit, it's multiple units that is able to go and fetch this level of price point. So again, guys, buy cheap, make sure you get the highest discount, right? Lowest repayment costs, lowest transaction costs, and then utilize the right rental strategy. You can't lose buying in Malaysia if you follow this strategy that I teach you. Okay? So, if you don't mind, I'm going to take the next 5 to 10 minutes to really introduce what Far Capital is all about and how do you become a client, right? So, this is only for people who fancy buying in Malaysia. You want to buy cheaper compared to most Bumi Putra Malaysians. So if you are looking to buy something in Malaysia, you want to do it little to no capital. If you can get a loan as of today and you want to buy cheaper compared to most Malaysian, right? You stay, listen to this, right? And again, Buran has already started. You want to enter now, don't enter Malaysia 3 years from now because at that point of time, you're entering at the peak. You'll be similar to Singaporeans who buy 10 years ago who all got slaughtered because they buy a market peak. You want to buy the bottom, not at the market peak. Okay? So what's in it for you? These are all of the benefit. Like I said, acquire millions of property in Malaysia with little to no capital. Own a nice retirement home that is paid by other people. You want to minimize your risk, maximize return in Malaysia property because you buy the lowest possible, you rent the highest possible, right? You purchase cheaper compared to locals, right? Then you don't have to save up 5 to 10 years to buy this because you get significant discount. You can legally own HDB in Singapore, own a property in Malaysia too. You want to buy property below replacement cost, you want to get above 7% rental yield, and potentially build a retirement portfolio worth 20,000 per month in Malaysia. All right. So, if you aspire to build any of this, consider becoming a client tonight. Okay. So, this is your normal price point to become a client. You've got two packages, guys. One is light client, right? The other one is full client, right? Premium, right? So light, you pay 1,036 Sing dollars, right? And it's a 3-year membership. You're going to be given personal success manager. You're going to be given 4 sessions of one-on-one, right? You're going to have access to all these that we have for own stay or investment. You're going to have access to all our unfair advantage course and our community group lah, for only 1,000 Sing dollars. This is a light package, normal price, yeah. Premium is 6,000, right? So what's the advantage here is that you can bring 2 other investment partners, so children, spouse, siblings, right? You can bring 2 additional people to buy together with you. Now, light client have to wait 30 days before they can buy after any launch. Premium client don't have to wait. You can buy immediately after we launch. And for 2 properties, you get a 2 booking fee waiver. Right. So this is our normal price point, right? And like I said, this is the difference. Light, from a partner point of view, no investment partner, you are on your own. Full, you get 2 investment partner. And when you purchase a property full, you get to buy property 30 days earlier. Light, you have to wait 30 days before you can buy. Otherwise, you pay a 2,000 ringgit surcharge to skip the 30-day waiting. And booking fee waiver, for full client, you get 2 free booking fee waiver. For light, no booking fee waiver. But worry not, light client can upgrade anytime to full by just paying the difference. Okay, but again, these are your normal price. For you guys tonight, there's a special price point, right? Whereby you pay almost 50% cheaper. Whereby instead of paying 1,036 Sing dollar, you pay only 587 Sing dollars. But this is only for tonight. This is only for people who sign up to become a client in the next 30 minutes. Okay? And if you want to become a premium client, it's only 3,110 Sing dollars instead of 6,002. Now, personally, if I were in your shoes as of tonight, just sign up for the light client first because you can always upgrade anytime to become a full client by paying the difference. So if you're not sure, just go for the light client first. 587 is your investment. And today, instead of just a 3-year membership, you get additional 2 years for free, right? So that means for 587 Sing dollars, you get to become a client for 5 years. You don't have to pay anything else other than when you buy a property, you have to pay the booking or your down payment. Okay, and this investment roughly works to less than 50 cents per day, right? 50 cents per day. So can I get cheaper than this? Like I said, the whole idea of becoming a client is that you want to buy the property at the safest price point as possible. You want to use the lowest amount of capital possible, and you want to be able to have access to the best rental strategy whereby you have access to our renovation contractors, property managers that can basically help you maximize your returns and your yields out of your Malaysia property investment. So that means you can buy something completely remote, guys, out of Singapore. Don't need to go to Malaysia, right? Unless once a year. And even the renovation and property management can be fully outsourced to the recommended panel of renovation contractors and property managers. They would also give you a bulk discount for far capital client. Okay, so on top of the discount that you're gonna get tonight, I'm also gonna give you a full refund guarantee, whereby if you decided to become a client tonight, okay, if you fail to purchase a property after following our advice in 5 years, we will give you a full refund. So that means unless you successfully able to go and buy below market value property, right, you get a full refund. Okay, so okay, today the bonus here is that on top of becoming a client, instead of just 3 years, now you get for 5 years. From paying 1,036 is now only 587 ringgit, Sing dollars investment tonight, and you get a full refund if you fail to get any result in the next 5 years, right? So if you're keen, right, click on the QR code, right, and begin your journey at Far Capital. Okay, so I think I've ended my presentation, so I think we can move on to the Q&A.
Great. Thank you, Faisal. Wow, that's a very impactful sharing that you have done.
I
And
hope so, man.
you have given the attendees a good overview of what's going on in the market and why Malaysia is a good options for people who are looking to buy properties there. So do you want to stay on that slide with the QR code?
Sure.
Have it on the full screen, please.
All right.
Yeah.
Cool.
Okay. Yeah. So as I pose you some questions, okay. So for all the attendees who are still with us today, please type in your questions in the chat box that is on the screen. If you are watching us on the YouTube, please come inside the webinar room. If you are watching us on inside the webinar room, the chat box is on the bottom right of the screen. If you're using a mobile device, please scroll up or down and type in your questions there. Okay, so we have about 15 minutes left to our committed 2 hours slot. So let's get to it. So I think the first question is that if a person wants to this deal, is 499. It's even lower than just now the 587, is it?
I am not sure. I think it's supposed to be 587. I think this is the typo. Sorry, guys.
Okay, no problem.
That's the one.
Okay,
Yeah.
okay, this one, huh? So what do they get when they join as a client? Is it what do they what like they get a online course or they get a attend a physical course or what they get a list of deals for the within the period or what?
So basically, number one, you're going to be assigned a success manager to look after your account. So basically, the job of the success manager when you become a client, right, is to analyze what do you need, what is your goal, right? Look at your loan capability, and then try to find a property that matches your goal and what you can afford.
I see. So
Right? Yes.
it's to
It's to
help the
match you with the right deal.
I see. And
So
the you does it so in other words it's like hand holding lah.
you are given a private success manager, right? So it's like a relationship manager lah for priority banking, right? So you got one person looking after your accounts and your portfolio.
I see, I see. So
So
if
that's yeah, that's one. Number two, we do multiple webinars per year. In fact, every month we do a client monthly update about the data economy, what deal do we have. So you can have access to that. We do property tour, we do physical event. So all of that for clients is free. So we do bus tour, like for example, like this weekend, we're gonna do 2 bus tours, right? So if you were to come to KL, right, you can join completely for free. Transportation is covered, well, within the bus tour itself, all the way to food, right? So you got education program, you got bus tours, right? You got webinars, right, which is monthly basis. If we do physical event in Singapore, you can also attend to get yourself to be updated. Most importantly, you get deals. And what deals? You get deals when you buy property, you get deals when you renovate property, you got deals when you try to outsource even property management. So for example, the standard property management rate, right, in Malaysia is about 12 to 15% of the gross rental. Ours is 0 to 8%. Because why? Again, bug lah. Because Far Capital has got a lot of clients. So the operators are agreeable to give them a discount. So not just on property purchase, you buy the cheapest price point. Renovation, you most likely buy the cheapest price point too. But even property management. Right? So you got full support, right, from education, what do you buy, the process of applying loan, all the way to defect rectification, all the way to collecting keys, all the way to renovation, all the way to property management.
I see.
End to end.
I think that's the word. End to end, one-stop shop.
Yeah. So all the while Malaysia does not have it. So I can tell you right now, we don't make money in any of the property management or renovation. We just have to do it. We just have to make the recommendation because we realize that if you buy at the right price point, but you use the wrong renovation contractor, your unit is going to look like shit. Shit unit will have shit rental. Right? So we have to make sure that our client use the right renovation contractor, use the right property management operator. Right? So handhold all the way.
I see,
right?
I see. And there's no additional things to pay to get that service?
One-time fee, 5 years, that's it. The rest of it is booking fee lah. You pay to the developer when you want to buy a property. The renovation contractors, you have to pay renovate. You can use the cashback to actually pay for your renovation fee lah. So even renovation, actually you don't use your own money.
Oh, I see, I see. So using the cashback.
Correct.
Understand. So okay, so in short, if I understand you correctly, it is a one-stop shop. So there's a person that is you can be in touch with who will bring a Malaysia property investor end to end, every step of the way.
Yes.
Yeah, got it. So the next question is you mentioned about no capital down, right? No money down. So are you referring to, because some training property investment courses also use this line, no money down. But when they say no money down, means that no money down from you, but you had to go and find friends or family or relative to put in the down payment. So in your case, is it like that?
No. Our no money down is truly no money down.
So don't have to go and ask friends, ask family, ask relative for money.
No, you don't have to. So but here's the caveat, right? Because your community is like half retirees, right? So if you are a retiree and you don't have a job and you don't have a fixed income, you can't get a bank loan. So if you can't get a bank loan, the no money down doesn't apply to you. Right? So the no money down truly applies if you still have a job, right? And you can get a bank loan.
Understand.
Right? So again, if you are, for example, a retiree, but you have children or family member who's still working, that they don't mind joining you, right, to go and buy a property, so you can leverage on their credit to actually get a loan. Then you can still do no money down. But no, we don't do this thing whereby you have to call your friends, relative, father, mother to go and ask money. Not your money, but some money lah. So when we say no money down, is really no money down because there's a lot of deals that we do as of today that even renovation is actually covered from the cashback. Right? So again, when your discount is significant enough, your down payment is covered by the rebate, all the way to even your renovation can be covered by the cashback.
I see, I see. So when you say rebate and a cashback, what exactly do you mean by that?
So let's say you buy a 1 million ringgit property, right? On paper, it's 1 million ringgit, but we got a discount of 50%, right? So you're gonna apply a loan based on 1 million ringgit property value, right? So
Yep.
let's say you get 80% financing or even 70% financing, right? So you get a 700,000 loan, but you're not buying the property at 1 million. You're buying at half a million ringgit, right? But your loan is 700,000. So what happened? The loan of 700,000, 500,000 goes to the developer who sells you the property at half a million. 200,000 will be given back to you. That's why it's called cashback.
Ah, I see, I see. So that cash will actually come back really, really in the form of cash.
Yes.
And then you use that cash for paying the renovation, the
Yes.
furnishing and stuff.
So
Mhm.
and we don't own any of this property. Your property 100% owned by you. This is not like Kumbaya group. You 10 people share one property in Johor. No, no, no. Property 100% owned by you. Faisal Far Capital has got no ownership over it. It's 100% owned by you.
I see, I see.
Cashback also goes 100% back to you. We don't keep it.
Understand, understand. That's cool.
Yeah.
Okay, next question. When you say, let's say okay, people working, no issue. People who are who needs to join with a younger working adult, what is the minimum age? 21 or 18?
As long as they have a job, right, and typically about 22, 23, as long as they have a job, and let's say,
Hmm.
for example, the job in Singapore, they make minimum 3,000 Sing dollars, they should be able to buy a property already in Malaysia.
Ah, I see, I see. And then how long can the loan be for in Malaysia?
35 years is the maximum tenure.
Okay. So 35 years requires the borrower to be at what age?
35 and below,
Okay, understand.
right?
Okay.
35 below.
Hmm. So about 3,000 Sing dollar salary,
Correct.
below 35 years old can borrow for 35 years.
Correct.
Okay, understand. And then the next question I have here is that are the properties leasehold or freehold?
Some of them are freehold, some of them are leasehold.
And for leasehold, typically is for how long? 99 years or 999 or?
So there's no 999 in Malaysia. There's a leasehold of 99, and then there's the Medini situation whereby it's 139 years. That's it.
Okay, understand. Any restriction on foreigners when it comes to buying or selling?
Yes, like I said, you have to adhere to the state minimum requirement for foreigners. For Johor Bahru is 1 million. For Johor is 1 million. For KL is also 1 million.
Meaning the minimum or maximum?
Minimum purchase price.
Oh, I see. I
But
see. Hmm.
that is your official purchase price. So your official purchase price before discount must be above 1 million.
Okay.
But you could buy something at 1.2, but like in the case of just now, right? My presentation, official price 1.2, but your net price is half a million ringgit because you get a 65% discount. You can buy that property.
Ah, I see. I see. So the
Because
lease.
officially, on paper, from a government point of view, you are buying at 1.2 million. So there's nothing wrong.
Hmm. I see. I see. Okay. So that's the only thing, or are there things like you can only buy brand new, and when you
No,
sell, you can only sell back to local. Can you sell to another foreigner?
no. You can sell to local, you can sell to foreign. This is not like Australia. So it's not
I
like Australia. So as of today, when people say Malaysia is anti-foreigner, I would disagree. Number one, as a foreigner, when you buy at the same price point as per a local. You probably have to pay 1% more, for foreigner tax in certain states. That's about it, right? But other than that, you pay the same price point as per local. You become a fuck up client. You definitely buy cheaper than that 1%. So you buy cheaper compared to most locals, right?
I
And
see.
when you sell, if you want to sell to a foreigner, just make sure that you sell above 1 million ringgit.
Ah, okay. So that 1 million ringgit minimum is not just on new launch but also on resale.
Correct.
Right, right, right. Okay. But okay. So next question is any additional tax to pay as a foreigner when buying or selling compared to
Um,
local? Like
you got
Singapore, there is the ABSD additional whatever stamp duty.
that's that 1% for now.
Ah, okay, okay.
That is requested by the state, right?
Hmm.
So it's for now it's only 1%.
Okay.
right?
Mhm.
I can, it's similar to Singapore. When the market is soft, then there's no penalty, right? There's no ABSD, very little,
Mm.
right? When the market is very hot, typically government will try to discourage foreigners from speculating in the local property market. So
Mhm.
we think it's going to be 1 to 2 years from now, there will be some form of clamping, similar to what Singapore has, but not going to be as severe because, we don't have such a hot property market like Singapore, right? Billionaires are not looking to buy one full floors in Malaysia. They will do it in Singapore, but Malaysia, second tier. So we attract the millionaires, not the billionaires, right? So
I
let's be honest, right? So we don't have the demand to go and do a 60% ABSD, right? Unlike Singapore. So if anything, Malaysia property market is a lot less restrictive towards foreigner compared to Singapore,
understand.
right?
Mhm.
But
Yes.
as
Mhm.
of today, like I said, the regulation is like that. There's a possibility that when the market becomes hotter, things are going to change. But
Mm.
does it affect you? Because they cannot go back and say, last time, I implement this tax of, let's say, 20%. Now you come and pay me 30%. Doesn't work that way, right? So
Mm.
it
Mhm.
cannot be backtracked, right?
Mm.
So they can only do it for new cases. But today, that 1% is what you have to pay as a foreigner. That's it. And again, it's only applicable to certain states, not all.
Mm. I see. I see. Okay, great. Do you stop sharing?
No longer stop sharing. Why?
No, the QR code. Let's have it. Let's keep it on the screen
Uh,
because the sharing stopped for the slide.
okay.
Okay, it's not showing yet. So never mind. So if next question, if people have a further questions or clarifications, how can they reach out to your office?
I think there's a link that you can sign up. I'm gonna let me. There's a link that is provided by the team, right?
Currently there's nothing is sharing on the screen. Your slide went went away.
Okay, very weird.
So still nothing on the screen, huh?
Yeah, I might have to log out then.
Oh no, don't log out, don't log out.
Yes, hi.
Yeah, because I still have questions and in case I lost you. Okay,
Right.
then I will share my screen.
Sure.
Okay. Okay, just let me get to that. All right. So let me continue. So the next question is that any estate duties, let's say if the owner pass away, and then is there like a hefty estate duty for the children to take over the unit?
Estate duty, not really. We
Oh dear. Oops. Faisal, I lost you. Let me see if I can get him back in. Let's listen to some elevator music for the time being. Okay, I've just messaged Faisal to see if I can get him back into the room. Okay, he's back in the room. I see you in the room. Maybe you want to turn on your camera. Okay, your mic. Okay, let's.
test. Can you hear me?
Yes.
All right.
Yeah, maybe it's the internet connection.
Yeah. Not sure
Okay,
why.
no problem. Let's continue. So
Sure.
we were talking about the estate duty.
Um, I, I don't think there's any estate duty. We have this thing called RPGT, but I'm not sure that the RPGT is something which is going to be applicable upon the death of a person. So from an inheritance point of view, right, there's no such thing as an estate duty for now in Malaysia.
Then what's that R whatever GP? What is it about?
Real property gain tax. So that means if you sell the property at a profit, then some of the profit goes to the government.
I see.
So
Capital gain tax. Is it a capital gain tax?
It's a capital gain tax, right? Real property gain tax, right? So basically, after your 6th year, you have to pay roughly about 5 to 10% of profit.
Okay.
From a tax point of view, if you were to sell.
So when you say of profit, that means not the selling price lah. So you take the selling price minus the purchase price, that profit, 5% of it is given as a tax.
Correct. But here's what's the cool thing, right? Let's say you become a FACAP client and you buy property at 50% discount. All right? So like the one just now.
Yep.
Officially, you paid 1 million, but your actual price point is 500,000.
Yep.
The government will take it that you buy at 1 million. So let's say you buy the property today at 500,000. Let's say 10 years later, Singapore property price double, Johor becomes the beneficiary. So that property become 1.5 million. So you made 1 million profit, right?
Yep.
Your first half, which is 50%, your first 500,000, you pay zero tax. Because why? You bought officially at 1 million. So on the government's record, you're only making $500,000 ringgit profit. Because you bought at 1 million, you sell 1.5.
Yep.
Right?
Understand.
So your RPGT is only applicable on any of the profit that you make post your official SPA price.
Understand. So that one only applies for after six year onwards, is it?
6 year onwards, you pay 5 to 10%. I have to check back what's the.
And if it's below 6 years?
Below 6 years, I think it's a flat of 30.
30.
30.
I see. So preferably hold longer lah.
I mean, if I'm right about the property buran, it'd be not smart to hold it for 1 or 2 years, right? You want to keep, right? And especially, for example, if you're looking to buy something in Johor, and Johor will be the proxy of Singapore. Unless Singapore is expected to do terrible from an economy point of view, real estate market point of view, which is a very highly unlikely scenario. It's not impossible. It's just very highly unlikely. So as long as Singapore does well, Johor should continue to do well, right? And if I'm right about my prediction of Singapore become more expensive than Hong Kong, right? So that means Johor property should have a 300% to 400% upside.
Understand. Next question is what is the current mortgage rate?
4%.
4%. I see. Okay, cool. Okay, so that's the main set of questions that I have. Let me now go to the list of questions that are posted by the attendees. Mark is asking whether the property sold come with strata titles. I don't know property, so yeah.
So it depends, Mark. If you buy a primary market property which is not yet completed, the strata title is not out yet. Because the strata title typically comes 1 year after the completion of the property. But for many of our existing inventory, especially the ones in Johor, these are property that was completed 4 or 5 years ago. So yeah, title will be out already by then. So it really depends on the deal itself, right? So some deal would have the title out, some deal title not out yet.
But eventually when it's out, it will have lah.
Yes, correct.
It'll be under the buyer's name.
Yes.
Okay, great. Let me see. Mark have another question. Are property asset managers to manage a property? Will you also help to find?
Yes.
Okay.
So what we do here is that different areas requires different asset managers. So for example, the guys that we do use in Johor is very different compared to the guys we use in Maluri. And the guys that we use in Monkera is so different. So we have a open system policy whereby we recommend any panel renovation and property manager that has got a proven record of performing in the area. So our recommendation is not fixed. So we're not recommending a crony company and maximizing profit of it. No. So whoever that can do the best job for the client is the one that we're going to recommend. Right?
Understand.
Ultimately, it's your money, it's your cashback, it's your loan, right? So you have every right to pick and choose whoever contractor or property manager that you want to use.
Got it. Okay, cool. So Mark also have another question. Is it wise for a buyer to agree to a separate covenant from the developer? Wow, I don't know what is that. Do you know?
I have no idea.
Okay, then sorry,
But
Mark.
but typically, if you're talking about deed of mutual covenants, it's actually pretty standard in Malaysia. So there's not much of a difference. So I don't know if the buyer or if the seller would agree for you to change any of the term in the DMC, deed of mutual covenant.
I see, I see.
Uh,
Oh,
but our Housing Development Act is pretty buyer centric lah. So basically, it's there to protect the buyer.
I see. Okay. Great. Mark, I hope that answers your question. I'm not sure whether that is your question. If you're not, then please ask again with a bit more clarity on your question. Next question comes
I
from...
guess the other thing here is that to maybe share a little bit with Mark is that because we buy a lot, so developer often give us a little bit more faith compared to you to buy one unit lah. So if I were to complain about certain units for defect or whatnot, so sometimes while they have no obligation to go do anything, they would do it because they wanted to maintain a certain level of relationship with us. Because if you are buying 50 units, then you have a very different relationship with the developer compared to the guy who buys one unit lah. So long story short, if you're worried about your interest being protected as a buyer in Malaysia, your chances are, from your interest point of view, you'll be far better off, buying under the FAR cap umbrella rather than doing it on your own.
Understand. Okay, cool. Okay, next question comes from Francis. Francis is asking, any government regulation to control Malaysia Bank to tighten the loan amount to the buyer based on the discount price rather than the invoice price?
That's a very good question, right? The answer to that, the system is already there, right? The banks don't want to do it. The banks do not want to give a markup, right? Of loan, right? That's just the reality. Bank Negara or Central Bank does not want it to happen to. But it's still there, largely because the developer needs to do what they need to do to go and sell. Number one. Number two here is that you also have to understand. Let's say, for example, if you're a developer and you sold 500 units at 1,000 per square foot, and you got a balance of 100 units, so 80% sold at 1,000 per square foot, but you need to sell the balance 100 to unlock your cash, right? And your choice is either you maintain the price and give higher discount, which is higher rebate and all that, right? Or you reduce price. Reduce price is the worst option because why? It devalues the value of the property, right? To the point whereby 400 buyers are going to be on negative equity, right? So it's not an ideal scenario today whereby it sounds a little bit dodgy lah. I understand, right? And this is a part of Malaysia boleh spirit, right? So anything can in Malaysia, right? So wait until you go Indonesia. But I understand where you are coming from. As of today, there are already measures whereby it was a lot more rampant 5 years ago. Today is less rampant, but this is still possible. But again, the only reason why this is possible and the clamping has not gone full force is that the reality here is that the Malaysia property market is still on the phase of recovery, right? That's why they haven't clamped it, right? I am guessing a year or 2 years from now, if we do a record number of property transactions this year and the index grew by more than 7% a year, you will watch this happening. None of this opportunity of getting a 50% rebate, not possible anymore.
So there's a certain window of opportunity.
Yeah, because the market is not doing as well as Singapore. See? So again, when the market doing very well, they start clamping. When they start clamping, there's less opportunity. So today, your opportunity, again, it's not at the maximum because the maximum opportunity was 2-3 years ago during COVID. That was the maximum opportunity. So today, there's some level of tightening, a little bit lah. So basically, let's say, during COVID, 0, right? Now we are talking about 10-20%. But most likely go to 70-80% 2 or 3 years from now. When the market is a lot more hot.
Understand.
So my advice to you here is that if you are worried about doing anything whereby dodgy, like taking cash back or doing a markup loan, just buy the property at the net price. It's not a problem at all. But
Mm,
you can. It's an option. My job is
mm,
to give you the option, right? If you want to buy without using any capital markup, you got that option of markup. You do
mm,
want to go do it with like some of our Singapore clients, you also have the option to go buy honestly, pay a 10% down payment and all that. It's
understand.
an option. At
Mm,
least you have an option.
right, right, right. And then the RM, your staff will guide them and show them the options, and then they will decide which path they want to take lah.
Correct.
Okay, understand. Francis, I hope that answers your question. Let me see other questions. Okay, now just to because your computer couldn't show the slide. For if they have questions, do they go to farcapital.com.my to call the number there to ask, or what?
There's a link below that basically link to our system. So basically, if there's any inquiries, right? So Christina, if you can put the link there, right?
Maybe Christina, you can WhatsApp the
Yeah,
link to me, then I can post it up.
yeah.
Yeah, Christina. So let me see what other questions. Okay, another question coming from Francis. Say thank you. Great. Next question comes from Chung Hui. Do we need to open a Malaysia bank account?
It's not a requirement. But I guess if you're gonna get a mortgage later, typically the mortgage, I mean, you are technically opening a mortgage bank account in Malaysia. You can't take a mortgage out of Singapore to buy something in Malaysia.
So the loan is from a Malaysia bank.
Yes. So it can be OCBC or UOB, right? But it's OCBC Malaysia or UOB Malaysia, not UOB Singapore.
Okay, understand. Okay, Chung Hui, I hope that answers your question.
And we will facilitate all of that. So in fact, for foreigner clients, I've got a dedicated team that looks after non-Malaysian. So they're very familiar with the process, which bank to go to, which bank to avoid.
Hand holding lah.
Full hand holding, and again, it's very specific. So if you are Singaporean, Malaysian working in Singapore, you got a different team managing you. If you are Singaporean working in Singapore, you got a different team managing you. Because requirements are similar, because one is a citizen, one is a non-citizen. Right? So
Okay.
the requirements are not the same.
Understand.
So we put specialists to look after your account.
Cool.
Because after all,
Mhm.
if you become a client and you fail to buy a property from us, you're entitled for a full refund, right? So we work for free for 5 years. We don't like that, right?
Right. So that's very important point that you just brought up again. There is a money back guarantee for the what Far Capital is offering.
Yeah.
So if a client is not able to get a deal after following the steps for 5 years, Far Capital will do the full refund.
Yep. Which is why our RM is called Success Manager, not Relationship Manager. Their goal is to make sure you are successful in your endeavor in Malaysia, right?
Great. Okay, wonderful. Just another question for Christina. Christina, do you have the link to sign up that you can also send to me in addition to the inquiries? The QR code, that link. Okay, so let me move on to the next question. Now there are some questions that are I don't know whether they are specific to property ownership, but I think they are relevant in the sense that it concerns them as a foreigner, right?
Sure.
So you see whether it's something that you can answer, or you felt that it is maybe not under your expertise or your knowledge, that perhaps you can then let me know lah.
Sure.
Okay.
I mean, what I know, I can answer. What I don't know, I just tell you I don't know. So I'm quite simple.
Okay, and then there are some questions they are asking specifically whether there is any new property from a certain property in the in the list. Dangon Bay Block 17A. Wow, that's a question from Michael. That's a very specific question. Maybe those questions later on you can contact Far Capital directly to ask for the
Sure.
deals. Okay. So
but guys, I just have to highlight to you guys, I can't reveal to you the deals that we enter as of now. Because we signed NDA with the property developers. We can reveal after the fact, but we cannot reveal any deal which is ongoing. We cannot reveal. Reason is because you have to understand, other agents are selling the same property, let's say, at 600 ringgit per square foot, and here we are buying at 500. So there's ringgit per square foot difference. So
Mm.
generally we buy cheaper, right?
Mm.
And we are not allowed to market or sell any property to people other than Far Capital client.
Mm.
So if you are a stranger, you are a webinar joiner, and you're not a client, legally I can't share with you the detail. Right? So I can give you description, but if you want specific Danga B, this block and whatnot, no. No, I can't reveal. Sorry guys. I signed.
Okay. Understand. So Michael, I hope that answers your question.
Yeah.
If you want the specific deals, you will have to become Far Capital's client first.
And again, I guess, would there be a situation whereby you can ask us to go and find deals, right, based on what you like, right? So the answer for that question generally is no, simply because our primary obligation at Far Capital is to make sure that you buy something that can make money. So whether you like it or not is immaterial to us, because liking, for example, I don't like this building because it's green color or black color or pink color, right? So you could not like certain thing because of the color. But we don't care about what you like or your favorite color, simply because our primary goal is what? Is to make sure that you buy property that give you the biggest unfair advantage that you can most likely make money. Right?
Understand.
So our goal is very straightforward. I think it's similar to stock lah. We don't have to like, we don't have to unlike stocks, right? We just have to, hey, is it the right price point to make money? Similar philosophy, right? At the right price point, everything is buyable. At the wrong price point, nothing is buyable for us.
Okay, understand. So, okay, Michael or anyone who have specific questions, please reach out to Far Capital's team at the using Facebook Messenger. So the link I've already put it on the screen. Basically, it's m.me/Far Capital. You can say that you have just attended the OTCS webinar, and they should be able to know what you're talking about. So because I also don't know what exactly you need. So please contact them, reach out to them directly for your questions. Oh, do you just unshare mine?
Yep, so that I can share mine in the event
Okay.
people want,
Go ahead.
Okay.
Okay, so while you're sharing that slide of the QR code, there's a contact information on that QR code.
Yep.
Okay, wonderful. So for anyone who want to have additional questions for Faisal and his team for Far Capital, please scan the QR code. And then there's a link there as well. Okay, let me see. sg.far.academy/memberships. Okay. Okay, understand. Now, now the next question comes from Jim. I'm going a bit into overtime because of the questions. I think since the attendees are here, let's give them the replies. All right. So we'll stay on for a little bit more time. Jim is asking, my wife and I are 50 years old. That is more than 35 years old. How many more years of loan can we get from the bank?
20 years.
So-
So it's 70, which is the maximum year of loan, right? 70 years old minus your age. So if you're 50, it's 70 minus 50, which is your age, which means you can get a 20-year loan.
Okay, Jim, I hope that answers your question.
So I can give a follow-up information, right? So typically a 20-year loan, most of the property you buy in Malaysia is negative cash flow. Right? Right? So I think, which is the reason why he asked that question, right? So it's gonna be negative cash flow for him at 20 years. However, in Malaysia, right, for people who are above 40, right, we recommend them to go and take this thing called interest-only loan or step-up financing. So
there's interest-only loan.
Yes, in Malaysia, which means even if you are 55 and you are supposed to get a 15-year loan, you pay the same mortgage as a 25-year-old. Which is why handholding is important, right?
That's a good information.
Yes. So if you are above 40, most likely you're going to be negative cash flow because your loan is going to be under 30 years old. So the recommended strategy for us, right, for people who are in that category, is to actually take step-up financing or interest-only loan.
What's the difference between the two?
Basically, step up is a form of interest only loan. Right?
Okay.
So it's either the two lah. Step up, typically first 3 to 5 years you pay a lower mortgage, you pay interest only, or you pay a subsidized mortgage, and after that you pay the full amount. So typically after 5 years, what happened? You can either refinance to another form of step up financing or interest only loan, or you can sell. Right? So those are options for people who are above 40.
Interesting.
Very clear strategy, right? Outline.
Well, I think the hand holding and end-to-end service is very important.
Yeah.
Yeah, because it's totally unfamiliar grounds for Singaporeans in
Yep.
Malaysia. Right.
Guys, how else would a Singaporean able to buy a 50% discount, right, without coming into the country and without even looking at the unit, right, is able to deal with the contractors, get the lowest price point, and find a tenant for 2 years who's going to pay almost a 10% rental yield? No way, unless it's full end-to-end.
Understand.
Right?
Wow.
So you can't do it unless it's full end-to-end, right? Can you imagine you as a Singaporean, you're not even in the country, your unit is tenanted from day one after it's ready, right? So
Cool.
you can't do it unless it's end-to-end. Sorry.
No problem. Okay, cool. So next question comes from Annie. I mean, this question might be a little sensitive. You can choose not to answer.
Sure.
How big is the Far Capital community that make you be able to get such deals?
We buy about 1,000 units a year in Malaysia, right? So when you buy 1,000, you are a significant player, right? Number one. Number two, from a community point of view, we've got about 30,000 members.
30.
30.
30,000. Okay, that's
30,000.
cool.
And we have aspiration to be listed in NASDAQ, hopefully in the next 18 months. So we'll most likely become a public listed company too. So means we're going to become bigger over time. So our deals are, going to be quite sustainable. As become bigger, you buy 3,000-4,000 units, 10,000 units a year. When you are playing that kind of volume, developer will come to you with deals.
Understand. Okay, Annie, I hope that answers your question. And the next question comes from Chris. Chris is asking, your deals are completed or uncompleted properties?
You got both. You got property which is already completed, which we call overhang. We got property which is under construction, which is currently still being built. And then we have this thing called pre-launch too. So that means super special deal that, before it's even launched to the public, Far Capital client gets to buy first.
Cool.
So
okay, Chris, I hope that answers your question. And the membership is for 5 years. So
Correct.
you don't have to you can, wait until the deal that you like, then
Correct.
tick all your check boxes before you proceed.
Correct. I mean,
Yeah.
It's not 587 Sing dollars per month, guys. It's one time over 5 years.
And the money back guarantee.
And there's a money back guarantee. If you fail to buy something, just ask for full refund. I don't want to keep your money, man. If you did not do the job.
Understand. Okay, Chris, I hope that answers your question. Now the main questions have already been answered, which I think is related to the properties. Now, next set of questions would be perhaps related to a potential retiree who wants to retire in Malaysia and the kind of concerns that they have. Right?
Yep.
So the questions is as follows. Okay. So first one, if I were to buy a place in JB for about 700k ringgit as a retirement home, what is the best visa or more permanent pass to apply to settle down in JB or Malaysia?
So the head of my department that manages our Singapore-based clients is called Rena. So I've gotten her to help. So basically, you can try under MM2H Special Economic Zone Financial Zone. It is actually cheaper compared to the 3-tier of MM2H, which is the silver, platinum, and gold.
Okay.
So if you are looking to buy Iskandar as a region, there's a MM2H Special Economic Zone only for Iskandar region, Melini.
Okay. So I don't know what you're talking about, but for the member who is attendee who is asking that question, I hope that answers your question. If not, do reach out to Far Capital. Next question. for MM2H in JB, what's the lowest scheme and the amount of money needed? Is there an age limit for senior retiree?
So if you are retired, you are only required to put in a US dollars of 32,000 deposit only. Right? Above
32,000.
49, 32,000 US dollars.
Okay.
If you are below 49, it's 65,000 US dollars.
Okay.
And you are allowed to withdraw 50% of the deposit to either buy a property, use it for education or healthcare.
I see. So that is second part of the same question that he's asking. Is it
Yeah.
true that half of the amount can be used to offset property purchase? So if let's say he's buying a $700,000 ringgit property,
Yep.
not the discounted price not the list price because list price need to be 1 million and above, right?
Depends. If you are buying in other parts other than Medini, then yes. But if you buy Medini, there's no limit on minimum purchase price, which is why Medini is a special economic zone. So even 200,000 so you can buy as a foreigner.
Oh wow, all these nuances.
Yeah. Which is why Medini is my recommended go-to area if you are Singaporean. Because there's no minimum limit of how much you can buy and there's no minimum limit of how much you can sell to. You go buy Dangabe today, you might, let's say for example, 1 million SPA, 700 purchase price, but later when you sell, you still have to exit above 1 million. If you want to sell to a foreigner. Medini does not have that limitation.
Right. I see. So in let's say he buy a $700,000 property in Medini, so the half of the can be used to offset the 50% of the purchase price, means can
Yes.
offset part of the 700K.
Yes. So basically, out of the 32,000 US dollars, you can take out 16,000 to buy property.
Okay. Cool. Okay. I hope that answers your question. That's a question from Michael. Let's go on. The next question comes from still from him. Understand that the MM2H for East Malaysia Kuching is much cheaper. Can apply under the East Malaysia scheme to buy property in JB?
Cannot.
I see.
East Malaysian is different territory, so you can only use it to buy property in East Malaysia.
Okay. I see. Okay, cool. Moving on. If you are under the MM2H, do you enjoy the JB public hospital benefits or any other benefits in Malaysia that is extended to PRs?
The answer for that is that you are. Yeah, you can.
Okay, great. Next question. Can MM2H resident buy a car and drive in Malaysia?
Yes, boleh.
Oh, okay. So I think he's all ready to consider retiring in Malaysia, man. Okay, next question. How many years is the validity of the lower scheme for MM2H?
5 years.
5 years. Okay. Next question. What's the minimum days of residency in JB a year to qualify for MM2H scheme?
Just 90 days.
90 days. Need to be continuous or no need?
Total. Cumulative.
Okay. All right. So that's all the questions from this attendee. And
By the way, Rena has also offered her help. If you are looking to apply MM2H, her team will help you coordinate too.
Whoa, okay.
So not only buying property, the MM2H bid, we'll do our best to help.
Understand. So I hope that also addresses some of the concerns that you may have for those who are considering Malaysia as a retirement home. Far Capital can also help, not just in the property, but also on the MM2H part.
But the MM2H, I have to warn you guys, we're very new to it. So there's going to be a lot of learning curve. I'm not sure how much help we'll be able to go and provide. Just bear with me and my team as we continue to learn. We are a learning organization. We're going to get better. We don't know. We tell you we don't know. And there are going to be things that you're going to have to do on your own, but we'll do our best.
Okay, great. So, yeah, good. Next, let me see. Okay. This attendee is asking, will HDB find out if they have a if they have a HDB property that is below still within the MOP?
So the answer to the question here is that I cannot give you 100% answer. I can give you what is sure and fact. The fact here is that the two governments are not talking to each other, reporting to each other what the residents are doing in their own respective country. Number one.
Okay.
But two, from a bank loan point of view, whatever bank loan you apply in Malaysia, you cannot, for example, even if you are on OCBC in Malaysia, OCBC Malaysia cannot go and alert OCBC Singapore that you bought a property in Malaysia. It's illegal.
Oh, okay.
Bank Secrecy Act,
Right.
you can't, right? So long story short is that there's no way for the government of Singapore to know that you actually bought something in Malaysia unless you tell someone about it in Singapore and that someone decided to report you.
I understand.
Right?
Okay.
Or worse is that you naively go and say every week go and upload story, chilling in my KLCC JB bachelor pad. You know?
Yeah.
Go and tell the whole world that you are doing it, then after that don't come to me and complain lah. Wow, my government find out I have to give away my HDB, I cannot find.
Understand. Okay, I hope that answers your question for the person who is asking it. So okay, I think that's the one last question. This question is a bit interesting. You say from a friend, right, who bought some properties in JB and also have a business in KL. Girlfriend in Malaysia, staying in JB all the time for the past few years. So come out to Singapore once a month. Okay, so not too frequent, Then
Okay.
get warning lately by the Malaysia immigration that his length of stay in JB and the frequency of visit is too often and too long.
Right.
Got such? Have you heard of such cases?
I'm not sure. I'm not sure, to be honest. The key thing for me here is that is the person being detained from coming. I mean, if your immigration guy is going to ask question because you seem to be not a regular occurrence, you know what I'm trying to say? Because typically you don't stay that long as a Singaporean, right? So obviously it's like, you know, this is like a secret, right? So every time I go to Jakarta for business, in order to avoid questions, right, from the authority, right, what am I doing there? I just tell them I'm visiting my fiance. Right? Now, I do not have a fiance in Jakarta, but it was the simplest answer I can give to explain why am I there 1 week every month. Right? So I don't have a answer to you because I do not fully understand what would be the trigger point for them to say, hey, we should investigate and interrogate this guy. But if they're just asking the question and you are still allowed to enter Malaysia anyway, to me, no harm. Right? I got a couple of Indonesian friends who got detained in immigration for a couple of hours. Right? Because they're not showing proof of where do they stay. Right? So for them, it's all about anomalies. And if you are part of the anomaly, they're going to have every right to go and ask questions, similar to if I go to, I guess, Singapore very often, right? At a certain timing, I'm going to get questions too, right? My view here is that the day that, for example, you get married, you can just say, I'm married to a Malaysian, I stay in Johor.
Or visit girlfriend.
Or visit girlfriend,
Stay in girlfriend house.
I stay with my girlfriend. Cakap je lah, Singapore too expensive, I stay with my girlfriend in Malaysia. Alah ke bang? Tanya lah.
I see. Okay, I think that wrap up all the questions that we have. Thank you so much for staying extra half an hour to help us address all the questions and for rushing back from your meeting to conduct this webinar for us.
Yep.
So for all the attendees who are still with us, the webinar is recorded. It's streamed on YouTube. You can go to YouTube, look for Wealth and Joy, and you can watch the webinar replay there right after this. Okay, and for Faisal, do you have any last words for our attendees?
First and foremost, I apologize for us starting a little bit late. Number one. Number two here is that I hope you learned something new today about the Malaysia property market, about the economy. Again, my pitch is a simple one. I'm not saying that Malaysia property is better than Singapore. That's not the pitch. My pitch here is that being a Singaporean today, you can own Malaysia property with little to no capital. It's kind of like a birthright. It's probably the only country in the world that will give you this kind of leverage and benefit. And I do not think that this leverage and benefit will be something which is going to continue for the next 20 years. I think maximum is going to be 2 years. So please take full advantage while you can. And again, please observe, our recommended criteria so that you can invest, buy safely in Malaysia. And my hope here is that anyone who buys in Malaysia actually makes money, because I don't like Malaysia to be pictured in a bad name whereby, everyone buy property in Malaysia, all lose money in Malaysia bad. Okay. So I'm hoping that because you attended this webinar tonight, and I hope I've given you sufficient information, data, and facts, it allows you to make better decision making and hopefully change, to not become part of the 99% of Singaporean who actually buy Malaysia property and lose money. With that, I hope you continue to learn. Looking forward to see you guys, I guess, in our next upcoming webinar if you want to join and learn again. And I hope you find today's presentation is useful and helpful. And I apologize if I did not answer any of the questions that you asked in a sufficient manner, right? Because my policy is that if I don't know something, I'll just tell you I don't know. I'll give you what I know, and I don't know, I say I don't know. I'd rather tell you I don't know than lying, you know. Uh, So yeah, that's just my policy. So
Thank you.
thank you everyone for your time.
Thank you, Faisal, for your generous sharing. And for those of you who wants to find out more, please scan the QR code or go into the link that Faisal has shared on his slide. And with that, I thank you for your time and do watch out for our next event by joining our Telegram channels. Good night, everyone. See you at the next event.